Start your business day right. Morning Drive with Tim Elliott on Mira Business FM. Start your business day right. Morning Drive with Tim Elliott on Mira Business FM.
Welcome to Mira Business FM. This is the Morning Drive. If you're with us on the website, mirabusiness.fm, welcome. And a welcome if you're on YouTube or across social media with us as well. Perhaps it's Instagram that you're watching, listening on, maybe TikTok. Who knows? You're welcome to be here. Now, our podcast, practically all that we do is podcast and is available wherever you get your podcast. Just look for Mira Business FM. And a subscription is always appreciated. To find out more, mirabusiness.fm, the website. To contact us, info@mira.fm, and to whatsapp.mira.fm. We start this morning with a week in gold, in precious metals, and the oracle that is Jeff Rhodes is back with us in the studio. Jeff, lovely to see you.
Yeah, good morning, mate.
Nice to have you here. Thursday, a day early. Usually we would talk to you either Mondays or Fridays. We're kind of in a Friday thing at the moment, but Thursday morning you're here, and there is a very good reason for that.
Yeah, absolutely.
I'm going to come to it. Because I want to catch up a little bit first, though. It's been almost a week since we've had a chance to talk. I know you're itching to talk about silver. I can see you there. You can see it in your face. And, of course, the Fed meeting. But I want to start with gold because my observation, reading your reports, kind of watching what's going on, we're still at steady Eddie, aren't we? It's around about the 4,200 mark.
Yeah, it is exactly at 4,200. Yeah. It's almost like a new gold standard. Wherever we go up a bit, it's back to 4,200.
Yeah.
We go down a bit, it's back up to 4,200. It feels as though this is a point of equilibrium. The longs and the shorts, I think, are equally happy. And also, you have to acknowledge we're heading into at the end of the year. We're into the festive season. The holidays have started.
Yep.
In the US, the Christmas holidays start and Thanksgiving Day.
I was going to say starts around the end of November.
It does, yeah. And so you see the market trading volumes fall away. And then what you're seeing is the residual business is taking place. There will be no fresh business. There will be no fresh positions being taken by investors or speculators ahead of the end of the year. So for all intents and purposes, the markets are very much in a holiday mood. We could have had some fun and games after what you want to come to, Tim, after the Fed rate decision. And it could have been interesting, so we'll touch on that in a minute. But definitely, it's a sideways pattern within a very, very narrow range. I think it is an amazing performance by gold at the end of these 12 months, where we've seen the price appreciate by 50 to 60%.
Yeah.
And it's still hanging in there. There's no downward pressure.
It doesn't feel like there's going to be any downward pressure either. You know, you often talk about this, and I kind of marvel at, the things you say, because generally you almost exactly to, I don't know how many decimal places, but it just feels like the graph is just a flat line.
It is,
just very, very
absolutely
straight at the moment.
Absolutely.
So look, ahead of the Fed meeting, we're going to get to the Fed meeting, not quite yet. US dollar advanced on Tuesday, near 1 week high, better than expected job market figures. So a resilient labour market. The first observation I wanted to make today with you is that the data is kind of coming thick and fast. We had that period at the government shut, but there was nothing really to talk about. Nobody knew what was going on. Yeah. Government wasn't releasing anything. But now we're starting to get a picture, I think.
Yeah, it's basically, the data's coming in gradually, and we're playing catch up. And there are no shocks.
Yeah.
And so it's business as usual. It's quite interesting you mentioned the dollar, Tim, and you frequently do. And of course, gold is another currency.
Yeah.
And so therefore it fits into the FX genre. But the dollar, as per the DXY, which is a basket of currencies against which the dollar is set against, hasn't really moved. It moves. It is actually steady Eddie number 2. It doesn't really go up much or down much. It's been one of the more, if you like, least active years I can remember in FX, honestly. And I think probably it's down on the year about 5 or 6%. Now, the popular myth is that strong dollar, weak gold, and vice versa. Well, the gold is up 55%, and the dollar's down 5%. So that I don't really think the dollar per se is much of an impact on the gold price. It's much more interest rates and getting return in your cash, because the lower interest rates go, the less return you're going to get on your money just leaving it on deposit.
Yep.
And so you have to look at another way to make money. And this is a big problem for the funds when they look at their traditional way of making money from equities and bonds and a bit of FX trading. Well, the FX trading's not really been there this year. Bond markets seem to me to be pretty steady as well. Equities have done well.
Yeah.
Very well. So good equities, good gold. I think it's because the money is flowing, and it has to flow somewhere, and it flows to those asset classes that are proven to be the best performers. And really, over the last few years, equities and gold have been equally good performers.
I wonder if anybody's ever referred to the US dollar as a currency as steady Eddie number 2 before. I love that. I think we've created something here. Look, let's get to the Fed meeting then. So this is another 25 basis point cut. 0.25%, third cut this year as well, kind of as expected. I know you pointed to at least 25 basis points, maybe 50 basis points earlier on. How would you summarize the meeting? Because I thought it was the tone of the Fed chairman in the post-decision kind of press conference that was interesting. But what did you think?
Yeah, well, first of all, it was, I think, it's the most diverse views have been set at this meeting than there's ever been before, because normally there's 12 out of 12. They vote, they have a consensus that works. This time we hear that it's 9 against 3, which is unusual. And of those 9, 3 of those 9 were in favour of 50 basis points. Yeah. Good boys. They would have been in my camp. And 3 were no change at all, and 6 were 25 basis points. So there was quite a lot of discourse between the 12 of them. But at the end of it, it looked like it's been nice to know you guys. I'm off very soon.
Yeah.
Type of presentation by the Fed chairman, and he's probably very happy to step out of that pressure pot, because clearly he's been under pressure from President Trump to cut rates. And, to be fair to Jerome Powell, he stuck to his guns, but he's probably very relieved to be having a break, and then we're going to see what happens. But it definitely will be a Trump pick. Definitely, there's no doubt about that.
Yeah.
And that tells me we're heading much lower in terms of interest rates over the next 2 years, with Donald Trump on record more than once saying that he believes that 2% is the right level for interest rates in the US. Now, is that really the case? We will see, but I definitely think the pressure from now on is going to be on the downside, unless the economy really starts to motor with interest rates where they are, then it won't be possible. But I think if there's going to be a move in interest rates from here, it's most likely down than up.
Well, and it seems possibly sooner rather than later. There's a lot of talk of another cut in January. Whether that happens, I don't know. It'd be interesting to see what how the White House responds to this, because you do kind of get the impression that it will.
Yeah, I disagree with that. I would. I think that the Fed chairman, I think his term is up in February.
Yeah.
So I don't think there'll be any more movement in interest rates.
It's chatter at the moment, but I've seen a couple of...
I call it noise.
Yeah, I know.
A bit of noise about it,
But
when
I've
we
seen
get
a few
into
reasonably influential kind of people online saying, "Oh, it could happen," but again,
in January, no.
Okay.
I really don't think so.
That's another one of your definite things I'm putting there. January. I'll just put in a big X by January. But whatever happens, it'll be interesting to see how the White House respond, because you do get the feeling that President Trump will be good, but this is not enough. That's the overriding kind of impression I have. And you're right. I mean, the pick for the next Fed chair seems to be Kevin Hassett. He's an economic advisor at the White House at the moment. He's kind of the front runner. I mean, I don't know. There's plenty of room to cut more, I suppose. The other thing, Jerome Powell, and this goes back to kind of the tone in the press conference, and I think you characterize it absolutely right. There seemed to be kind of a sense of relief. I'm out of here kind of view, end of the year. He said it was a close call, as you said, lots of not dissent, but certainly not consensus. And that he feels right now, this is what he said, I could make a case for either side, that's what he told reporters, and that policymakers are in a good place to wait and see how the economy evolves.
Absolutely. And there's no doubt that given all, the apparent problems in the world, the US economy has moved along very nicely. And that, I think you only have to look at the Dow Jones and look at, equities globally, actually, that they've done very well. And so it's been a bit of a bumpy year, I would say, for the money managers. They would have done well. And certainly the funds have piled into gold in the second half of 2025. Really a big movement of fund money into gold and, of course, into silver.
I know you want to get there, and boy, will we get there. Well, James Thomas is coming in this morning. He's a financial guy. I'm going to put that to him as well, because you nearly went to the bumper cars analogy there for a moment. A bumpy year is close enough to bumper cars to me.
Yeah.
We seem to be coining phrases. How good they are, I don't know, Jeff. Yeah. Here's something I just wanted to bring up to you, and this is not for any reason other than I thought it was interesting, because it kind of echoes how you've been about gold over the last 3 months or so since you've been, joining us. So this is by way of compliment, I think. This is a market analyst at eToro, who lots of people will know. His name is Farhan Badami. He's looking at gold's performance in 2025. We're looking ahead to 2026. That's what happens this time of year. Gold is on track to end 2025 as one of the world's best performing assets, surging nearly 60% year to date, which you've said this morning once again. Strongest yearly gain in more than 4 decades. The metal remains resilient. This was ahead of the Fed meeting. Looking ahead to 2026, he suggests that continued uncertainty could push prices even higher, with $5,000 an ounce not off the table. It's like he's been listening to you every week.
Well, he hasn't, Tim, because I said 6,500, and you made a note of that.
I did, actually.
And I stick to that. Look,
It's here.
when you say 6,500, it sounds like a massive number, but percentage-wise, from where we are now, it's not that much.
That's true. If you put it that way, you're right. If you look back a couple of years, it would be.
Yeah, but we're in a different. There's been a paradigm shift.
Yeah, absolutely.
There's no doubt, and the days of $2,000 are gone.
Yeah.
Maybe the days of $3,000 are gone.
Right.
But why wouldn't you? I would ask you a question. Given you're a money manager and you need to go with the money, you need to actually follow the trend. Okay. Why would you bet against gold now? I mean, it's not overbought, and when you look at the amount of global investment, the global investment pool, I would think that gold holdings of gold no more than about 1 or 2%. And given the popular feeling that at least 10% is the right level to have gold in your portfolio, there's still a lot of room for fund money to come in. And of course, when the fund managers are asked, why did you invest in this? It's always track record. And the track record is now, as my colleague at eToro said, is one of the best performing asset classes. But it always has been, whichever period of time you look at.
Yeah, it's just what we've seen recently is it felt out of character, but it's clearly not out of character. Do you see what I mean? I can't put this.
Listen, what's happened is gone from the back page to the front page.
Yeah,
that's really what's happened.
That's fair. Yeah. But if you were going to ask me, what did I think of gold? I was sat talking to our producer Michael the other day, and he was talking about gold. It's not his area, and look, all the indicators. And you are saying, up to $6,500 an ounce. That's a great deal of room to maneuver from where we are now, obviously. And if I ever research and I look at what some of the big analysts say, you're all pretty much in tune with one another.
Yeah, that's a bit of a worry. It's a bit of a crowded space, to be honest with you. And when the time to think down is when everyone is thinking up. So, but I don't know that everyone is thinking up. I think there are still some cautious people out there. But I go back to the pool of investment money available to go into gold. Only a very, very tiny percentage has made that move already. I think there's a lot more room to come. And as I say, the key is President Trump. And President Trump wants 2% interest rates. Yeah. And President Trump tends to get what he wants.
He does. And as you've said many times, he's good for gold.
Trump is good for gold, yes.
Yeah, that's fair. There are people more bullish than you, of course, which is, let's see. Well, we'll keep talking to you. Let's move on to the big one.
The big one.
The big one. This
should be playing Hi-Ho Silver Lining.
I know we should.
You need some music.
Yeah, we do. Unfortunately, I missed a trick again. But silver is at the moment it's hitting crazy heights.
Yes, well, not crazy. Expected
by you.
Expected by me, as in the public domain 12 months ago.
Yeah.
On a couple of podcasts. One was Sprott.
Yep.
Can't remember the other one, but Sprite is a big one. And when I kind of shocked the interviewers when I asked if I could talk silver, this is when silver was $29 per ounce.
Yeah.
And I made the prediction on that show of $60 within the next 12 months. And
This is
what?
why I keep using my slightly corny line, the oracle that is Jeff Rhodes, because unfortunately I look at what's going on and everything is to the...
But with silver, it wasn't difficult, Tim, because when you looked at the fundamentals of silver, physical demand versus new supply, it has been in deficit for many years, for 10 years.
Yeah.
And that deficit has been fed by the perception of large amounts of above ground silver held in vaults in London. Okay, so that tended to be that filled in that gap between demand and supply.
Yeah.
But it has emerged very clearly this year that a lot of that silver is actually pledged, and is pledged against ETFs. Mm-hmm. And so the amount of the percent, and the ETFs are always backed, or typically backed by large bars of silver sitting in London vaults. And because of those large bars sitting in London vaults, everyone thought, guess what? Silver is in abundance. Mm. But when it emerged that they're actually pledged, they're not available, then there was a bit of a panic. And silver, which is always... Contango is the difference between the spot price and the forward price in commodities, including gold. And silver has always been full contango. So that means if interest rates 5%, the spot against forward silver swap would be 5%. That the silver lease rate 0 for years. Yep. And then suddenly it reached this year lease rate 30%. So if you're short and you had to borrow to cover your short, you were paying 30% per annum. It's unheard of. Yeah. And so silver going from 29 to now 62.
It's 112%.
It is a bit more than that, Tim. I think it's about 120% against the high right now. The thing is, for me, it was a matter. I've been saying it's a matter of when, not if. So, and I kind of shocked you the other day, suggesting $125.
Oh, well, are you still bullish for that?
I
think
believe
you are.
125 is again a matter of when, not if.
Your predictions were 125 for silver, gold 6,500 as we know, 6.5 platinum. We'll get onto that in a moment. 3,500, and palladium 2,500.
Yes.
Yeah, I know you're sticking with it. I get that. Just a word, actually, just briefly on platinum and palladium this week. Anything to report?
No, it's been pretty quiet, steady. Platinum was up to 1,700. Palladium above 1,500, so on the way to my eventual targets for next year. But it's quiet. It's definitely. Look, many refineries around the world, many industrial operations around the world actually close over the Christmas and New Year periods. There's a number of gold refineries in Switzerland where they're closed. Not now, but they'll close. For about 2 weeks over Christmas and New Year, and then you can have a bit of a shortage. But as I say, whatever you see between now and the end of the year isn't indicative at all as to what we can expect in terms of all four prices in 2026. I'm so bullish I can't see straight, Tim.
I just think it's nice to see you smile. That's what gets me. There's something else just before we've got 5 minutes left. There was a newspaper article this week, and I'm interested in this just for your kind of opinion, really. UAE residents travelling to India with gold jewellery may soon get a breather, was the headline. So India is considering at the moment a major overhaul of its custom rules. Finance Minister Nirmala Sitharaman has signalled plans to simplify and modernise procedures at entry points. Now, NRIs have been pushing for this. I think we've wanted this for some time. Yeah. The last duty-free jewellery limits were set in 2016, and clearly they don't match gold prices at the moment. Yeah. That's a huge change. What do you think about that? Could you see that happening?
Yeah, I can. The duties applied to gold imports into India have always been quite volatile, really. You've seen it since I've been here in the UAE. You've seen maybe 6%, I think, was about the low. It's been up to 15 or 16%, and it does tend to be a bit of a moving feast. So, India, I would argue strongly, India is the biggest buyer of physical gold in the world. Lots of people talk about China, and fair enough, and China is the biggest gold producer in the world and doesn't export 1 ounce. So all of that, their 400 tons, are actually consumed within China, and then they are importing a lot more, 1,000 tons or more. That often feels as though it's part of a trade finance type operation rather than real demand. I can't really prove that, but it feels that way to me. Whereas India, Indians believe in gold, and I think it would be a very good move for Dubai, of course, if Indians, non-resident Indians, going back into India were allowed to take in a lot more. It would give a massive boost to the jewelry sector here. There's no doubt about that. I could easily see that happening, actually, particularly, we've got the CEPA. I mean, UAE has got CEPA agreements, import-export agreements with many countries, including India. So, I think a coming together of the two nations is quite likely and would be extremely positive on all sides.
Yeah, I would have thought so. It just seems, if you look at what the finance minister said and read, I don't know if I should, we probably shouldn't read between the lines, but it seemed very positive. We need to make them a lot more simplified for people to feel that it is not too tiresome, cumbersome for them to comply with the expectations and rules.
Absolutely, and we have to be realistic because import duties are high. It does tend to encourage what they call alternative methods of gold flowing into India. And so if you make it less economically attractive, then you kill that side of the business, which is obviously good for everyone.
Yeah, absolutely right. Jeff Rhodes is the CEO of Goldstream Advisory. I omitted to say that earlier on, but have I missed anything today? Is there anything else you wanted to bring up?
No, not really, Tim.
I
think, no, not really. And we could bring up the fact that Spurs won 3-0 on Tuesday, if you had to mention it.
Can I just point out, Jeff turned up this morning in a jacket. It was a little bit, I was going to say parky. That's an old London term that you'll understand. Slightly chilly this morning, and took his shirt off and revealed a Spurs, a polo shirt, I think they call them, don't they? Which, of course, burned me to my very soul. But there you go. No, it's a good win, to be fair. Jeff, lovely to see you. Thank you for coming in.
Thanks, Jeff.
Appreciate it. Jeff Rhodes, CEO of Goldstream Advisory. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio. Mira Business FM, Dubai's home of business radio.
This is Mira Business FM with me, Tim Elliott. It's the morning drive. Welcome to the show. Don't forget, you can contact us very easily, info@mira.fm, and you can also find us at WhatsApp, which is whatsapp.mira.fm. If you would like the number, 522-789-567. Plug that into your phone to talk to us directly in the studio if you would like to. Now, I'm very pleased to be joined in the studio by a newcomer to the show. Sudesh Mayakar is a freelance financial journalist. He's written for lots and lots of different people here in the UAE, familiar to many, of course. But Sudesh, it's a real pleasure to see you. Nice to have you here.
No, thank you for inviting me.
I'm enjoying the blue suit. It looks great on camera as well. I should tell you that. That's an important point to make. Look, lots to talk about today. And what I want to do is to maybe start with Abu Dhabi Finance Week, which is kind of, for most of us here, that's really the big financial news of the week, isn't it? So let's start there. Where do we start? I guess let's look at some of the announcements coming out, some of the upshot from ADFW. What are your thoughts?
I was there on the first day, and it was quite a delight to watch. All the top executives from, say, Blackstone, from Amundi, from Bank Julius Baer, from Bill Gates, my childhood hero. And obviously Mubadala and other government officials, and it was buzzing with activity on the first day and the day out and the following days, and something to really take away from this was they had a plethora of discussions about inclusive growth, about women in finance, etc. But really, the top story would be how Abu Dhabi is trying to consolidate its position in the financial market, especially as far as FIDA cluster is concerned. They want to attract more financial companies, more insurance companies, more crypto companies, more of these companies, and really consolidating its position to boost its non-oil growth, because they are on the path to boost its non-oil growth, expected to be like $15 billion by 2045. So they are in the part of diversification. I think ADFW, really serves its purpose, in trying to diversify the sector.
It's interesting that you say that, because it really feels like, and as an outsider, looking in at the conference, I haven't been there this year. This is the fourth year, but it seems like a marker to me of Abu Dhabi positioning itself as a global kind of, a financial kind of hub. That's in my mind the image of this year.
Absolutely, you're 100% right. And parallelly, another announcement that really caught my attention was Mubadala. Mubadala really coming out and signing an MOU with Aldar and investing 16 billion dirhams to create this new city. To consolidate, Abu Dhabi's position to be the capital of the capital. So it's two-track. It's diversification plus also urban living. They have their eyes and sights on everything to invite more people, as well as to create an ecosystem, a robust ecosystem where people can live, where communities can live and thrive and prosper. So they have their boots on the ground. They have their strategy in place, and what we are seeing is like piecemeal approach. One by one, we are being introduced to it, so that we don't get bombarded with too much of information.
There's been a few heavy hitters. You mentioned Bill Gates there. He was here. I think he was on a panel.
Yeah.
And then there was the pledging moment. So world leaders here, donors here, committing new funding to the global polio eradication initiative. He was there talking. I thought this was quite an interesting talk. I saw a little bit of this on social media, talking at length about his partnership with the UAE. It's quite a long-standing partnership. He's been here a number of times. Yeah. His efforts to eradicate malaria and polio, and his vision for the future. So that's interesting. We had the former UK Prime Minister here. He faced a few questions about brain drain from the UK. So it's a really wide-ranging discussion at Finance Week, I think. But in terms of digital initiatives, in terms of fintech, Did anything stand out for you in that field, in that realm?
Yeah, according to newspaper reports, they're introducing something. Obviously, it was announced earlier, but it's inevitable that they come out with this digital dirham for people to really. That's the electronic version of your paper money, to have widespread acceptability among residents and among expats in this part of the world. So that will enable like instant settlement and widespread availability of this e-money. So yeah, so that's making a buzz. And also, I was obviously, when I told you earlier about the FIDA cluster, so they want to really attract these companies on ground, and already we have been seeing this on ADGM. Private equity firms, hedge funds, really making a beeline, and the world's best names are in town. So yeah, more power to Abu Dhabi.
It's day 4 today, isn't it? The last day today. I'm interested, just really in your thoughts, Sidesh. To be honest with you, how about the theme this year? The 4th edition of Abu Dhabi Finance Week is centered around engineering the capital network. I'm sure you've seen all the social media advertising, all the promotion for it. Exploring the purposeful design of new financial systems built to harness innovation, AI, and a rebalancing of global capital flows. So it's very obvious there immediately that these are bold plans, aren't they? They're kind of grand plans. So that theme to me kind of reflects growing influence of the UAE and the GCC, to be fair, kind of as a gravitational center for capital forward-looking investment strategies. So blockchain technology, potentially a change of course for capital flows in the direction of the GCC as well, I suppose, even more. What do you take from that engineering the capital network?
Yeah, that's an interesting point, and there wouldn't have been a better headline this week to really propagate ADFW, because Paramount Skydance announced they are in a potential transaction with Warner Brothers. Obviously, they have this counter offer from Netflix. Yeah. And Paramount has said that they have backing of the PIF of a Saudi-based firm, plus Qatar Investment Authority backing the deal, and that might be worth like $100 billion. So they're talking about big money, flowing out from here.
That interests me actually as an idea, but it's just this. There are a number of sides to that. You would imagine, I guess, with President Trump's proclamation the other day that he wants to have a look at this deal, the Netflix offer I'm talking about here, but he is certainly feels favorably towards this part of the world, the GCC. There's no doubt about that. But in terms, I guess, of soft power, that it makes a very important point. It's a real foothold in one of the world's most attractive industries. It's a real way to influence and what's the right word to put this politely? But it's a real way to make a point, I think, isn't it?
Exactly, and they're making a big point in the global financial markets. Something that we saw in September, not long ago, when PIF really backed the EA deal that was worth about $50 billion. So more money coming from this part of the world, going from this part of the world to all these big, huge, mega deals. So that's the headline.
It's always interesting how all these things kind of come together. You hear things and you realize these are not disparate strands. This is a joined up strategy, the way these things work. Final thoughts, I guess, on Abu Dhabi Finance Week? Anything there anything that surprised you this week? If you were there on day 1, obviously the first day is the splash, the heavy hitters are there. What stood out to you?
Well, it has got so much of attention that, typically what happens in conferences is that, and I've attended many conferences, maybe hundreds of them in the past 10 years, that, the energy levels try to deteriorate maybe on the second, third day maybe. Yeah. But this has not happened in case of ADFW. That has, even yesterday was a jam-packed show. I don't know about today because I'm not there, obviously, but I'll find out from my folks who are there. But there has been no let up in terms of interest and people flowing into Abu Dhabi Finance Week. So that just underlines and underscores the point that how serious Abu Dhabi is in really taking this forward, taking the whole global capital flows, taking the whole story about FIDA, etc. forward, and really consolidate its position as the financial powerhouse.
No, I think that's what really stands out, doesn't it? Look, we've got lots to talk to you about this morning. We'll look at some of the financial headlines. I'm just looking through my notes here. There is so much to say. The interest rate decision at the Federal Reserve last night, of course, ripples already being felt across bond yields, equities, emerging market capital flows. What's been happening in Abu Dhabi as well. We've got a couple of minutes before we'll just take a break, but let's just look at. Let me ask you generally about markets. What are markets watching today, taking into account the decision of the Federal Reserve last night?
Yeah, they're trying to digest the Fed decision in the aftermath. This has been the rate cut for third consecutive time. And how they have been trying to take job growth at loggerheads compared to inflation, because inflation is not a priority for them now. It's more about job growth, and that's the biggest takeaway we have had from Trump's Trump's presidency. That how do we boost local growth? How do we boost local jobs?
Yeah.
So they are playing into that particular headline, and really the road that will be one of the important things that market would watch out for is the trajectory that Federal Reserve might take next year. Apparently they are going to slow down as far as rates cuts are concerned. So that would not bode well for stock markets. For example, bond yields are already at 16-year high, to levels last seen in 2009. Gold has inched up to about $4,200 per ounce. Markets being markets, you're not sure about what can impact markets and what point in time.
Yeah, well, you never are, and I guess we shouldn't be. I was talking to Jeff Rhodes earlier this morning, our gold specialist. Jeff joins us on a weekly basis, and we were talking about the cut that the Fed made, 25 basis point cut. President Trump is on record as saying he would like to see 2% as the kind of base level for interest rates. The range at the moment is something like 3.5 to 3.75. So you would think there's a lot more to come there. What would be your observation?
Well, another factor to watch out for would be potentially new Fed chairman coming over.
Possibly, yeah. As Kevin Hassett seems to be the front runner at the moment.
That's right.
He's
Yeah.
an economic advisor.
So we don't know at this point in time what's there in his mind. We really need to, reporters, and obviously we have not heard from him so much. But yeah, when he comes on board, maybe next year we'll figure out. But
he's a Trump pick. He will be a Trump pick. You would figure he would be favorable towards the president, perhaps would more have the president's ear, you might say.
Yeah, but you cannot see convergence in economics and politics, right?
Well, you shouldn't see that, but I mean, increasingly we see that, don't we? Let's be honest.
Yeah, absolutely. You're right, and that's why we have seen this change of stance from Jerome Powell to a new Fed president. So yeah, let's figure it out. But I'm sure he will look at the data. He will look at data points. As far as inflation is concerned, as far as non-farm payrolls are concerned, non-farm payrolls are concerned. So he would look at the data points and yeah, good luck to him if he wants to get it to 2%.
Well, it's a high-pressure job. We will wait and wonder next year when it comes to that. What else this week has stood out to you in terms of financial news? Put to one side the Fed decision, put to one side Abu Dhabi Finance Week. What's in the forefront of your mind? What are you writing about?
Really, the big numbers. It's a money game at the end of the day. You see, in $100 billion deal. One of the biggest deal in 2025, and I think that robustness would continue going into next year, because 2026 would be another robust year for M&A and global capital flows. We would see more deals, more high value deals in 2026. Another point to watch out for will be AI. What will happen to AI and the evaluations of these companies? Are they like overblown? What do we make of this? And how do we feed in the whole energy power requirements to get these data centers up and running?
It's a huge question. Yeah, it is. And the more you look at the numbers and you look at the requirements and you consider the size of these data centers, it's staggering, isn't it?
Yeah. S&P Global Energy pegs the number at 48 gigawatts by 2048. So that's something to really watch out for. Google CEO Sundar Pichai, he made a mention that they're going to build data centers in space to get to use the solar energy.
Data centers in space, like revolving space station data centers.
Yeah, adding to the junk that is there already in the space.
That's a fantastic idea. I love the idea of that. I love these grand plans. The thing is with plans like this, when people like this, if Sundar Pichai is talking about this is not coming from nowhere. I don't know. Let's just leave that there. But that's a nice thing to think about. How do you view AI going forward into next year? Just a personal opinion. What are your thoughts?
I think AI is important, but the kind of funfair that they had in the past preceding years, in terms of AI really solving each and every problem, I think that's not the case. We need to and that has been the modus operandi for corporates. Before the launch, they would try to make a big hype about it, but then it kinds of reality would struck them. So this whole question about overvaluation of AI companies is not unfounded. It is true, but markets will decide, obviously, at the end of the day, where the real valuation of these companies lie.
We're talking to Siddhesh Mahakar. He is a well-known financial journalist here in the UAE. Ostensibly there talking about Abu Dhabi Finance Week and a few other things. We'll continue in a few moments' time with some more of this week's financial news. This is Mira Business FM.
Mira Business FM. The sound of success. Mira Business FM, the sound of success.
This is Mira Business FM. It's the morning drive with me, Tim Elliott. You can contact us and the usual ways. info@mira.fm is the email address, and then, of course, WhatsApp as well. You can bring up the dialog box on your computer just by typing whatsapp.mira.fm and get in touch with the studio directly. It would be a pleasure to hear from you. You can find us across social media, of course, and the podcasts are available. Just search Mira, M-I-R-A, Business FM, wherever you get your podcasts from, to listen and or view again. With us in the studio this morning is acclaimed financial journalist Sidesh Mayakar. He's a sharp observer of global credit markets and emerging market trends, among other things, financial. Sidesh, thank you for sticking around. A few kind of more general questions for you this morning. We've discussed some of Abu Dhabi Finance Week, touched on the whatever's going to happen with Warner Brothers. We don't know. Lots of things still to talk about there. But, you know, the backdrop at the moment is the Federal Reserve cutting interest rates, I suppose. Markets obviously watching that. But what else are markets watching today, do you think?
So markets are watching the Fed very closely, and the tone they might use in terms of what's coming next, as far as the rate cycle is concerned. So we have seen the bond prices rising to the highs of 2009 because on the back of this cut in interest, 25 basis point cut in interest rates. So that is something that market is watching out for. Gold prices hovering at about $4,200 per ounce. So on the back of this, gold prices are high. Obviously, bond yields are high. And then obviously equity markets. For example, Dow Jones Index, it has risen only 10%, 8 to 10%, in the past 1 year. So compared to such a bull run in gold prices, that has been the outperformer. Obviously, I'm not talking about. This is not in comparison with cryptos or with bitcoins, obviously, but this is mainstream financial assets.
I mean, gold is the story of the year, isn't it?
Gold, absolutely. And your previous guest alluded to it, Jeff Rhodes. He has been a veteran in the gold market. There was one crazy prediction that someone said gold will touch like $10,000 per ounce in 2026. I think he's trying to just hog some limelight.
I think that's a headline grabber for sure. But I mean, Jeff himself would say, with some knowledge and experience in the sector, he expects $6,500 in the next 12 months for gold. And we are now currently, 4,200?
Yeah, I'm not surprised. Given the kind of volatility we have seen in gold prices. When I was a gold correspondent for Thomson Reuters, and that's when I got in touch with Jeff Rhodes back in the day. So gold was hovering about $1,700 per ounce, but it never occurred to me that I should buy some physical gold and keep it. As an investment.
It's occurring to us all now, though, isn't it? For sure. The other story there, I mean, he's obviously a proponent of gold. That's his primary kind of position, I suppose. But he's also a big fan of silver. And if you look at the increase in the silver price this year, something like 60% year to date. The record for silver at the moment is around about $62. He's predicting $125 in the next 12 months.
Yeah, silver has been the more, what do I put it, the more nasty cousin compared to gold.
For many, yeah, that's probably true.
So very volatile in terms of its price movement. And if it goes into hibernation, maybe into a phase of consolidation, it would go on for years. And then we'll have a sudden spurt in silver prices. So I think that's exactly when we saw when prices went to as high as $40 per ounce, and now I won't be surprised for another addition of $50, $60.
Okay, let's have a quick look ahead then, since we're moving in that direction anyway at 2026. That's what we kind of do this time of year, of course. But what risks do you think investors should be watching for as we head into a new year?
The interest rate cycle.
Right.
Yeah, and what might the new Fed chairman, come in 2026, and what he might do to appease his boss, President Trump. So that's something to watch out for. That might create a mayhem in the market because at the end of the day, we don't want data points to suggest something else, and and the Fed doing something else altogether. There should be a convergence in data points as well as the interest rate cycle, and broader sanity in the markets.
Okay. What about where people should be putting their money this year? Where do you think the bigger investors are going to be putting their cash in 2026?
I hope so. Someone would have told me gold in 2025. I would have been the most happiest person.
Jeff's been doing that. There's room to maneuver.
He's a perennial gold bull.
For sure.
Yeah, and it took so much of time, maybe for a gold investor to make money. Yeah. He had to maybe hedge his bets. Maybe he had to be very, very, disciplined in the market to get this spot in 2025. So there's no easy money to be made in markets. You just had to be a disciplined investor and see the day as and go through a day as it is. So yeah, I'm tempted to say Bitcoin, but I don't want to lose. I don't want people to lose money as far as Bitcoin is concerned, because that's been more volatile than anything else, and the sharp gyration. I tell people that you can invest in Bitcoin only if you have money to lose, and I don't know how much of money you can lose from your own savings.
That's just sound market advice. However you dice that up, that seems sensible to me. Last question for you. I know you have to go to a meeting. What's going to define the financial landscape, do you think, next year?
President Trump and his...
It's a strong answer.
And what he might do to the policy, the tariff policy. We have seen this, one step ahead, two step backward kind of situation in 2020, 2025. I was in the US for a couple of years, and I went to see the inauguration in January last year.
Okay.
It's been a year now, and the kind of edginess is there on the street, and so it is in the financial markets. So it's interesting. It will be interesting to watch out for what Trump might do, President Trump might do for tariff, what he might do for Fed. So I think just watch President Trump and his moves.
It's so interesting, this, because there are two schools of thought on this. There's the school of thought that President Trump makes decisions on a whim, and I think there's some evidence for that. There's also the school of thought that people believe that he makes decisions and keeps people guessing. I don't know which it is. I'm not really qualified to comment on that, but that seems to be where we are. But what the overall kind of umbrella for that is that it's very uncertain. That's the way I view.
Yeah, exactly. It's very
situation.
Uncertain. Presidents cannot make decisions on whim. It has to be more nuanced, and it has to be more data-driven. It has to be more, more statesmanship.
Sure. Yeah. Okay. Let's see what happens. Hopefully you'll come back and join us, Sidesh, and we can talk a little bit further. Sidesh Mahakar is a acclaimed financial journalist joining us at Mira Business FM this morning. Good to see you. Thank you for coming in.
Thank you for inviting me. Thank you.
Really appreciate it. This is Mira Business FM.
Mira Business FM. of success.
This is Mira Business FM. Welcome to the morning drive just before the National Day weekend. And we're going to be looking in a few moments' time, rising bills, higher rents, the real price of daily life in the UAE. That's our next topic. If you're with us on the website, mirabusiness.fm, welcome. If you're with us on social media, welcome. Maybe on YouTube, you can get in touch with us. And it's important today because I think what we're going to do is take an approach, kind of a case study based discussion approach to this. So if you have a question for our next guest, if you're watching or listening on the live stream right now, we'll address any questions you might have when it comes to the real price of daily life here in the UAE. So how do you do that? info@mira.fm or whatsapp.mira.fm to get the WhatsApp number up, get the dialogue box up. Now, this morning, diving into a question almost everyone in the UAE has asked themselves at some point: how much do I actually need to live here? Now, to help us break it down, we're joined by Michelle Karbi, who is a financial expert. She's an international wealth strategist who advises clients on cost of living planning, budgeting, financial security, personal finance, long-term wealth, etc. Michelle, that's a long list of things. Welcome back.
Thanks, Tim. So nice to be back with you.
Nice to have you here. Last time you were here, I should jump in here. Just very quickly, we need to kind of mention it because you were here talking about the upcoming budget, and there were those fears of the exit tax being introduced for wealthy people in the United Kingdom. The speculation is always, where are they going to go? Maybe they're going to end up in Dubai, Abu Dhabi, the Emirates, this part of the world. I guess it's something that's still being studied. It didn't come into effect in the UK budget. It's not massively relevant to many of us here now that it's not happened. But it's worth talking about. Size of relief, I suppose. Less millionaires making their way to Dubai is probably the upshot at the moment.
Well, I don't know, Tim. I think the people that wanted to leave because of the fear of increased taxation, perhaps have already left. So you're not going to see the exodus or the stampede to the exit post-budget. I think that's already happened. There'll obviously be all eyes on the spring statement. That's still coming, of course. And I think everybody right now is calculating the cost of the new budget and the difference that it's going to make to them and their families in the daily life, because, of course, personal allowances have been capped. Those haven't increased. There's going to therefore be that many more people paying tax that weren't paying tax before, because obviously annual wages increase with inflation, but because the annual allowance hasn't crept up and is going to be capped, rather you're going to find that many more people being affected by the tax take. And though, Rachel Rees has a big hole to fill, so it's very important to get as much money into, the government PLC that they possibly can. And that's what's being spoken about so much right now is the significant amount of income tax that is going to be paid to the government.
It is, and we'll just watch the spring statement. Hopefully you'll come back and join us for that as well, and a bit more regularly too, it has to be said. So let's talk about the cost of living, and this is a really kind of different discussion to obviously the first time you were here. Opportunities abound. The Emirates is more popular than ever. I think that's fair to say, but we all need to work to a budget in somewhere, at least most of us do. Rising rents, higher grocery bills, school fees go up regularly, of course, insurance costs, transport, day-to-day spending. Cost of living in the UAE is it's shifted noticeably over the past few years. I think most of us would agree with that. Whether you're single, professional, young couple, family of five, whatever it is, financial realities all look very different. So how do you plan? What should you be budgeting for? And how much does it really take to not just survive, but to be actually financially stable in the UAE? It's a really difficult question to answer. There's a lot in there.
There's a lot in there. I was going to say that's about 25 questions.
I know, and I do that on purpose because overall, I think if you take an overview of that, and it's almost that you don't answer the question, but you make a conclusion from that, and that's where we kind of launch from. That's like a springboard.
Of course. And I think dovetailing into what you just said there at the end, Tim, is really significant. And it really brings the power of getting advice and sitting down with somebody, an expert like myself or somebody in our industry, before you make the move.
Yeah. Yeah.
Don't, you see a lot of keyboard warriors take to Facebook, and similar platforms are available to say, how do I, budget? What do I need to earn? And they get, the length of breadth of other people's experience. But I think to be able to get it right for yourself, it should be all about you. Your personal circumstances. What are your key objectives? Why are you thinking of moving? Those out there on social media are not thinking about you, but rather talking about themselves or their own personal experiences. So getting something designed, bespoke, holistically for you and your family, and then making an informed decision about, am I making the right choice? Is this going to improve my circumstances? If your objective is safety, savings, building up your financial security, how do you achieve all of that? What is the job you're coming to? What does that look like? What is your expenses going to look like? How can we fit this into your budget? So that you come to Dubai with that budgeting mentality in mind before you set foot on terra firma Dubai, so that you realistically go into it with your eyes wide open. You don't make, the 101 mistakes that other people make every single day. And you get the best of your Dubai experience.
It's important that you say that, because, and I was hoping you go in that direction, because what people want in these kinds of conversations is really kind of personal, tailored advice, and it's really hard to do that because everybody's circumstance is different. You may have 4 kids, 3 kids, no kids. Somebody sick in the family, not. You may earn X. It's really difficult to zero in. So I don't want to ask you like $1 million questions. And that's kind of the reason for throwing it open today. So to anybody listening or watching at the moment, info@mira.fm or whatsapp.mira.fm is the way to get in touch. If you want the number, 522 789 567 is the number. You don't have to remember that, of course. Because I don't want to kind of sit and say to you, how much do you realistically have to have? What do you need to live in the UAE to? Because it's so different. Couple of questions coming in, and I had a feeling we'd get some questions in for this for you. This is from a lady called Linda. We are a mid-career family with 2 primary age children. We're debating between, here we go, renting a larger, higher quality 3-bedroom apartment in a neighbouring emirate, Sharjah, or a smaller, older 2-bedroom in Dubai. So 2 children. Help us decide if the cheaper rent is a false economy. What would you advise?
Tough question.
It is. That's
It
really
is,
difficult.
because
Yeah.
there are a number of factors at play. But if we just go with the facts that have been shared, because generally I'd ask a lot more questions, but where are you going to be working? That is a very important consideration.
What's the commute like?
What is the commute like?
Yeah.
You've got to factor in the increased cost of motoring, because Salik is a daily reality for those using any of the motorways. You have to factor in the cost of parking. You've got to factor in the fuel cost, maintenance cost, time cost. There is a value to your time. How do you feel about spending, a longer commute drive? Does that work for you? How is your support system? You've mentioned you have 2 children. So how's all that going to work? Where is your children's school going to be located? Because you need to be able to make that, drop off and pick up seamlessly for your children. And so living in a different emirate, for example, might not work with your personal circumstances. It might be okay for a short while, while the novelty is there, but when the novelty wears off, in the full picture, then you're going to think, oh, I made the wrong decision. And then it's too late. You've got to see out the year and do all of that stuff. So it's really just important to understand the location of the school, the location of your employment, and then decide, where to live.
There's also another side to this as well. If you have two kids and they're of a similar age, is it okay to have them in the same room? You and your partner, your husband and wife, have the other room, I suppose. So do they need to be near their friends? There's an awful lot that's kind of what's best for the family unit type question rather than a financial question in a way, isn't it?
Of course, because it's all about circumstances.
Yeah, okay. So, Linda, I don't know if that helps you, but hopefully it might a bit. Ahmed, are buy now, pay later schemes and low interest loans truly a tool for managing expenses, or are they a hidden cost that ultimately encourages unnecessary spending and debt?
I agree.
What do you agree with?
The
Hidden
last
cost.
part.
I had the
Yes,
feeling you.
the last part of the question. Thank you, Ahmed. Definitely a recipe for disaster.
Okay.
We've seen it time and time again, where people are tempted, in that buy now, pay later mentality. You're just kicking the ball down the road.
Yep.
And it's a problem I'll address at some given point in the future. And it gives you a false sense of economy, because in a previous, life, you would have said, I have a budget for one dress and I'm going to the mall to buy that one dress. But with a buy now, pay later, you suddenly have an unlimited budget. And instead of one dress, you potentially could buy 5 dresses and pay for them on the never, never. And it gives you that opportunity to have more, so instant gratification.
But that's us these days, isn't it?
It is. But the discipline needs to be there, Tim, where you need to think about, I just need one dress, I don't need 5. And, kicking the can down the road in terms of, I'll pay for it later, or on the never, never, or on the bonus I think I might be receiving, or additional cash I might have in the future. You can't build your life on ifs and buts and maybes. You've got to think in a disciplined, structured way.
Good answer. Ahmed, there you go. That's what we think here. I'm going to buy, says Caesar, an iPhone for about 5,000. 5,000 dirhams, a lot of money for a phone.
It is.
So it is. Anyway, I'm going to buy this iPhone 5,000 dirhams. Is it smarter to use a personal bank loan or a credit card's 0% interest period? Which option is truly cheaper in the long run? I'm going to hazard a guess here that your answer may be, if you have to borrow money to buy a phone, don't buy the phone. I had a feeling it was going to be that. But this is the thing, right? A lot of people, you see this a lot. There's a new gadget, and I love gadgets as much as anybody, but I was the guy for a while, and it was new phone every year. Oh, I'm so excited. I've lost interest now, I think, and I buy my phone when the other one breaks, or I trade it in. Borrowing money to buy a phone doesn't seem the best thing to do.
No, it definitely doesn't. I agree with you, Tim.
Yeah.
And you hit on a very valid point there. You have the opportunity of trading your phone in. So do that, which will obviously reduce the cost of borrowing. There are some other options, some other discounts or opportunities out there. Why buy new? You could potentially get a reconditioned phone. You don't have to necessarily have the very latest model, many other models to a similar job. It just perhaps is not the brand that you're coveting with an iPhone. But it's a tough one, right? Because I understand, needs and wants, and that's why you go to work every day. You're aspirational. I understand all of that, and it's very frustrating to say no to yourself. But there are other considerations. So trade in your old phone, look at perhaps a reconditioned model instead. You don't necessarily have to have a new one.
Yeah, I mean, this is the thing, isn't it? If you really want something, and I think this is the thing with people that offer financial advice, and I think it's a little bit unfair. So I'm going to take your side for a minute. Financial advice isn't about saying you can't have that. Financial advice is about saying be sensible about the things that you want in order that you can acquire them. It's not, you're not saying to anybody you shouldn't have X. You know, the latest iPhone is the example here. It's whether you can feasibly afford it.
Absolutely.
And can I get you to the point where you can? That's your thing.
Absolutely.
Yeah.
Absolutely. And think of other strategies. You know, is there a way that you can save the money over 3 months and then buy it with savings?
Yeah.
Or, you know, like I mentioned before, can you not buy a reconditioned one because it'll probably be 2/3 of the price of a new one? So you could still achieve the same outcome, just a different way.
The other side as well is with, you know, we're kind of quite disposable by nature and we all want the latest gadget. People buy a gadget, sell it on in 6 months, not having much use, it loses a load of value, so you're going to get a pretty decent gadget from somebody that's moved on to the next thing anyway. So,
absolutely.
You know, it's the car thing, isn't it, as well? You can get great car deals here. Anyway, we're off topic. Let's go to another question. I've got a couple more to give you, to offer you here. No name on this one. I have debt from an app. I don't know what app. It's 3,000, I guess that's 3,000 dirhams is the debt from this app. I'm stressed because I don't earn that much in a month. What advice can you give on how to budget so I can pay?
Well, what I would suggest is speak to the app provider, the company, whoever, because a lot of them do have other opportunities and creative ways in which to repay. I definitely say close the account so there's no more temptation to pay or spend on it, and then work with the company on a repayment structure.
Yeah.
What are they willing to accept on a monthly basis? Don't bury your head in the sand. That's the absolute worst thing that you can do, where you run away from the problem rather than trying to deal with the problem. A lot of these companies have debt solutions, debt help, debt structuring that they can offer you advice. They can restructure it perhaps over a longer time to make the payments more affordable. But the point of advice for that particular person is speak to them. Don't run away from the problem. Break it down. And you obviously need to become a little bit more disciplined so you don't fall into this trap again.
Okay, good advice, I think. Let me ask you a couple of questions that I'd kind of planned to ask you, and we'll go back to the text in a minute. In fact, there was one thing, just let me bring this up for you. I think it was Ricky, who's not taking this massively seriously. What's the best way to get rich before my comedy career starts paying in 2037? So there was another thing for you just to think about, Michelle. Look, we live in a city. Dubai is a very progressive city. It's an expensive city to live in. It's not cheap to live in Dubai. It's not cheap to live in Abu Dhabi. The UAE, cost of living is high. But what is it that's driving costs up? We've seen rents, groceries, services all push upwards. So what are the big cost drivers right now that make it higher to live?
Tim, it's supply and demand.
Okay.
That really encapsulates a lot of that issue that people are facing today. We've got to think about how many people are being attracted to live in this region. You know, if we rewind pre-COVID, we weren't seeing the huge influxes of people that you're seeing today. And it shows no sign of slowing down. Now, people are being driven to live here, not just for the climate, but safety and security has become one of the biggest drivers of people to this region. They also like the sunshine, of course. For a lot of countries, it's amazing. You don't have many seasons in the year, two perhaps, if you're lucky. And the quality of education is very important, where, perhaps in people's home country, they don't have the length and breadth of choices that the UAE offers from an education perspective. You also have the attractiveness of the medical facilities on offer. In a lot of people's home country, the same level of medical care is not available to you. So there are a number of attractive opportunities being offered to people who come, and just the freedom of movement and the freedom to make investor choices. Entrepreneurship in this country is a huge driver. A lot of people move here to start a business, start a new life, make a massive step forward that they wouldn't have been able to do in their home country. So it just gives you that much more opportunity. And it's a very progressive economy and a very progressive country where there is a very good can-do attitude. You know, there's not, no, you can't, it's not possible. That conversation doesn't take place. It's more about, wow, that's a great idea. How can we do it? How can we facilitate that? And they offer so many more visa opportunities nowadays. Nomad visas, you know, the digital ones, golden visas. It makes it a very attractive proposition. So just by the sheer number of people being attracted here is driving property prices, school prices, grocery prices, just supply and demand. And of course, inflationary pressures. You know, the cost of items 12 months ago are not the same as they are today.
It's a good answer. I'm going to go back to the questions for you. This is Ali. I earn 11,000 dirhams a month, says Ali. Thank you for the honesty. I really want to save at least 3,000 a month, nearly 30%. But if it is just in my bank account, I know the feeling here. I'm always tempted to spend because I know I still have money. Is there a way to save or invest it that I have no way to spend it? That's kind of the pay yourself first, isn't it? Idea.
It is absolutely right, Tim. You've heard this before.
Oh, yeah.
Pay yourself first.
Yeah.
So, you know, set up a disciplined structure that actually takes that amount of money out of your hand before it sits in your bank account. So there are a lot of options. Going back to, you know, speak to a financial professional, somebody like myself, or somebody similar, where you can work out a structure. You know, is that third of your salary feasible on a continual basis without giving yourself a headache? What is the best way to save? What is your risk appetite? And how long do you think you're going to be able to save at that level for? So what are the key objectives? Let's design something around that for you. And then set up a savings plan that you can actually contribute to on a monthly basis.
Yeah.
Whether it's, you know, in a bank savings account or an investment style account, you know, everything is personalized to you. So work it out, but I agree, don't let it sit in your bank account.
Yeah, do something with it. And just, I mean, the thing is, it's just that the idea of just get rid of it. If it's gone, there's nothing you can do with it. And then
Absolutely.
in 10, 15 years' time, you get
It's
a surprise
suddenly,
of, oh,
absolutely.
hold on, there's your money for your house or, you know, whatever you're going to spend it on. Perhaps a nice McLaren. Sorry. Like you should have seen Michelle. If you're watching, you saw Michelle's look there. Look, let me ask you this. Difficult one, but it's an interesting question. No name. Hi, Michelle. Glad to see you on the show. I follow you on Insta.
Oh, thank you.
There you go. I saw a post about moving to or investing in Portugal. I don't know where this person is from. Current salary is over 20,000 dirhams a month. Do I stand a chance of investing or moving to Portugal? I guess we probably do.
Everybody.
It's difficult to answer.
It's a difficult question to answer. Definitely reach out and we can talk about it more. But of course, you know, in that can-do attitude, everything is possible. But is it the right move for you and your family? So, you know, that obviously needs to be looked at. Portugal offers a number of opportunities for you to move there. Obviously, you need the right visa. So we need to look at that and design the solution for you. But of course, anything is possible.
And Portugal's pretty great as well.
The cost of living in Portugal is really attractive. And that's what's making it a go-to for a lot of people.
I got to be honest, I was thinking more pasta donata and cappuccino, but that's my level. You're at your level, so that's fine.
I don't want to take your desserts away from you, Tim.
It's nothing like a custard tart, Michelle. Let's go back to the questions. There's something I wanted to ask you here, and this is, I think, what many people kind of struggle with, and lots of people consider, maybe are considering at the moment. For lots of us, rent or mortgages are probably the single biggest kind of financial burden, really. You've got to have somewhere to live. Is there an ideal percentage of income that people should ideally kind of allocate to housing? Is there a figure, kind of a ballpark figure? And what do you see in the people that you speak to with what they spend?
Look, in the traditional sense of financial planning, it's about a third for everything. So a third of your income, your household income, should be attributed towards rent, mortgage, whatever, your housing cost, a third. A third of your income should be allocated to your expenses, whatever those are, and a third is for saving. That's the ideal scenario.
Sure.
And understandably, not everybody can color within those lines. And again, that might not suit everybody, but that is the gold standard. Where you are in the UAE, for example, with rising and quite high rent and mortgage costs, and income levels perhaps are not where they need to be for a lot of people, it's a difficult one. But you need to obviously carve it out in a sustainable way that you're not going to be causing yourself hardship with those rising costs. And you need to think about it. I did a little example, if I may share that with you,
Please,
Tim.
yeah, I'd be interested.
Because everybody's talking to us, it's not just your listeners, but this is in my day-to-day life as well, is, what's driving up the cost of rent or housing? And I sat down and did a worked example to share with you today. And if we look at, a villa pre-COVID, 1.8 million, take a very standard figure for a 3-bedroom villa, in a number of communities in Dubai, that was an achievable figure. If a landlord was hoping to receive an 8% ROI, which is very average for the property market, he would have been happy with 150,000 dirhams rental per year.
Right.
And that seems in proportion for a pre-COVID, even during COVID type of number. However, since COVID, those villa prices have increased exponentially. Now that 1.8 million villa is probably worth around 6 million dirhams today.
Since COVID,
Correct.
that's 4.5 years since COVID finished. Or did it finish? No, it didn't finish. But you know what I mean? The kind of prime COVID period.
Absolutely.
Wow.
It's incredible what property prices have done. Now, if we take the example of the same landlord, he's no longer happy with 150. We're talking about the same house. The house hasn't changed.
Sure.
He's no longer happy with receiving 150,000 dirhams a year rent because his ROI on his 6 million villa now is hardly going to be 2 or 3% return. He's no longer interested. That's no longer why he's a landlord. So, rental increases play a large part here because the landlord is going to demand much closer to the 8% mark that he was achieving when the same house was 1.8 million. So suddenly, the rental for the same villa today is looking like 300,000.
And that's effectively what we see.
And that's the reality, 100%, Tim, of what we see today. So a lot of people are being priced out of various communities and various parts of Dubai because of returns of investment, either on villa pricing and being able to buy and sell and making a large profit, or on the rental cost that has increased exponentially.
Anything is only worth what people are willing to pay, though. isn't it?
Correct.
That's just an old adage that still stands. So how sustainable is this situation, is my next question for you.
Supply and demand, Tim. When the demand stops or reduces, then perhaps there is going to be a more competitive property market, and perhaps the rate of growth slows. I don't think there's going to be a crash. That doesn't seem likely, but perhaps the rate of growth slows down.
Okay. There you go, Tim. It's supply and demand. Shut up. But you are absolutely right. Here's another question for you. This is Ella. Many pay rent with multiple checks. I was shouting there for some reason. I don't know why. I think it was excitement. Many pay rent with multiple checks, says Ella. Does using fewer rent checks per year, like 2 or 4, positively impact my credit score with the credit bureau compared to using the more common 4 or 6 checks, even if all are cleared on time, everything's fine, everything's paid? Any differences?
I wouldn't say so,
Yeah.
because how the credit bureau system in Dubai is set up currently, your rental is not reflected on it. It's only your credit agreements that are affected on it, and perhaps your status with your particular bank is reflected on it. So whether you're paying your rent in 1 check or 12 checks isn't going to make a difference per se to your credit score, because your landlord is not a credit agreement. If he was a bank, and you were, just turn it around slightly, Tim, and if your landlord, just pretend, was a car and you were paying your car installments, it's much better to obviously pay each and every month on time, because if you didn't, that would be a cross against your name from the credit bureau's perspective. But your landlord is not a credit agreement, so he doesn't feature on your credit score. Where he would feature is if a check bounced, for example.
Right.
Then that would be a big black cross against your name, but that would be given from the bank side, not the landlord side. So do what is comfortable for yourself. So if it's more comfortable for you to pay your rent over 4 or 12 payments, if your landlord is willing to accept a longer payment, do that, because it makes budgeting easier.
It does, yeah. It's just so many landlords are used to the system of, you pay a year up front or 2 checks or maximum 4 very often. Next year, we're going to see it a little bit easier to pay through some of the online platforms on a monthly basis as well.
Yes, that's coming,
Yeah, that
which
is
is
coming.
really exciting.
Yeah, it's a good thing. I mean, direct debit's been here for a while. It's been around, it's been available. It's just, but it's not become a thing.
Exactly, because the check system is still so widely used.
Yeah.
And if you think about it, in Western countries, checks are antiquated and haven't been in existence for, a very long time, 10 plus years. And the banking system, direct debits, and other payment methods have really evolved in that time and lead the way. Whereas this region seems to love the check payment system, so they've really kept hold of it.
It's, I guess, as much as anything, it's a habit, isn't it? It's a thing. It's the way things have been done before. So if it ain't broke, why try and fix it? I suppose.
Absolutely.
Yeah. I think there's another question in for you. We're a little bit over time, but who cares? Sometimes you just have to go over time. Oh no, that was Ella there. Let me go to another one of these questions, and I think this to me is a really important question, and it's something that comes in a lot when we talk about things like this. What is what's a healthy emergency fund? Because often financial advice is, make sure that you've got all your ducks in a row, essentially, and you should have an amount of money, which is an emergency fund, should you need it if something unexpected cropped up. Is it 3 months' salary you should have should it be 6 months? Or is there a figure even?
Tim, this again is a little bit like a moving target. What we express to clients that we work with is that you should have at least 3 months.
Right.
That's the minimum.
Okay.
And it doesn't necessarily need to be 3 months worth of salary. what I prefer to say to people is 3 months worth of expenses as a bare minimum.
Right.
6 months would be amazing. And sometimes you can work towards that, can be aspirational, build up towards the 6 months. But as a point of starting, 3 months worth of expenses needs to be locked down in an account, hopefully a number 2 standby account so that you're not tempted to dip into it and spend it. And it's there in the event of emergency. And I see so many instances where this has been a real problem for a lot of people, because most people in Dubai, sadly, is one check away from doomsday, where they have absolutely nothing to fall back on. So if they lost their job today, how are they going to live tomorrow? That opportunity needs to be there, so that's where those 3 months worth of expenses fall in, that you can keep yourself going, you can feed your family. This is a real, real important topic, and I can't stress it enough, Tim.
It's a question that comes up a lot, Michelle. It does.
It does.
This is a question from Chad. It kind of relates to the previous question on credit scores. I'm so dumb. I forgot to deposit money. I love the honesty, but the essence of it is this: I forgot to deposit some money, and I bounced a check. I paid it in the next day. But it's a sensible question. Will that negatively affect my credit score, and how? What does it actually mean?
It depends on your bank per se. Some banks are stricter than others, but it's rarely not going to help your relationship with your bank, because they view this very gravely. It's for them the worst possible thing, even if you did deposit the money the next day, and good on you doing that. But they see that as a red flag. It makes them incredibly uncomfortable, because you have to understand that the banks have been through a lot of stresses themselves. The global financial crisis, COVID, all of these things, where they were really stress tested. Where people had credit agreements and various things that they weren't able to keep up with. And it does put a lot of pressure on the capital adequacy of the banks. It does give them stress. And they want to make sure that you are a good customer. And just one bank's bounce check could reduce, if you had an overdraft with the bank, for example, they could call that overdraft in immediately. It could give them that much discomfort. So it's worth having a word with them, making sure that they understand the circumstances, keep the dialogue open.
Couple more questions, and then we're a little bit over time, as I said. But I think this is also a really important question for you, and it's a very, very broad question. But I know you'll have a comment for sure. What are the most common budgeting and planning mistakes that you hear from? Those kinds of mistakes that end up putting you under financial pressure, but I guess kind of unnecessary financial pressure, the kind of shock things, surprise things.
It's not having that emergency fund, Tim. That's the biggest mistake.
Really?
People,
Okay.
yeah, it definitely is. They're not that, any of the Facebook groups are the leading example or the pillar of the community, but you're seeing it more and more, where people are reaching out to their communities and saying, I don't have money and I can't feed my family. Can somebody please help me in this shape or form? And thankfully, in those communities, people are stepping up. But also, I've noticed of late an apathy from the community, where they're saying, actually, I'm having a tough time too, but I'm not reaching out for help. And this is happening too much. Therefore, I'm not going to help you. So there is rarely a shift happening where there's an apathy within various communities that are saying, actually, this is now being asked too much and you need to be more responsible. But I think it is the biggest problem, because all you need to do is have a health scare. You lose your job, you have a health scare, something happens back home, and you're called on for emergency funds right now, today. That is sometimes the difference between, having and not having for a lot of people. So I can't stress enough, Tim, with all the listeners out there, make it your New Year's resolution, but definitely get a plan in place to have emergency funds.
The thing is, it does happen. This is the thing. Look, it happened to me. I got quite seriously ill 5 years ago, and just as COVID was about to hit, actually, and I've had lots and lots of treatment over time, but I was never in that position where I didn't have. I had some emergency funds there. I had saved some money, and the thing about it, aside from going through treatment and everything that comes with that, and I had to cut back on work quite a lot because there were times when you couldn't do the work. But as a freelancer, I was kind of okay because I could almost pick and choose. But having, it wasn't a lot of money that I had, but having some money there made a big difference in terms of the relief. It kind of, it's a stress relieved, really, that that's not on your mind, that kind of immediate financial pressure. So I'm kind of echoing the sentiment. It's so important.
Absolutely, Tim. And we talk about, just from a health perspective, there are plans that you can put in place. Insurance, for example, critical illness,
True.
Which is an amazing tool and little known. So, it's only when you sit down with people like myself do we talk about these things. And it really does create the point of difference. And that's, in a way, what gave you opportunity. And that's what I say to clients that I look after. Having types of plans and insurances in place, having a good quality medical insurance is very important because very easily with the lower plans, the cost of treatment may exceed the value available within the plan. And for a lot of people, that can be the difference between having the treatment and not having the treatment.
That's absolutely right. It's frightening that I thought I was one of those people that was like, it won't, but it never happened to me. No, I'll be fine. It'll always be fine. And of course, you can't think like that. It's taking responsibility, isn't it? 3 more questions for you, because I'm so over time. I'm going to get sanctioned in some way. But anyway, I'm interested. How much does it cost to get financial consultation and advice from experts? First of all, no name on this. I don't earn much, but I want to be more financially literate. There you are.
Excellent. Great question. Usually, from people like myself, usually the first meeting's always free. And that's why we encourage them robustly. And they don't have to be in person. They can be done on Zoom. But it's a great opportunity to have a health check for your finances. So I couldn't encourage it more. Either sit down with somebody like myself or go to your bank and take the opportunity of taking your personal finances really seriously. And again, make it a New Year's resolution for yourself.
There are other financial advisors available, but Michelle Carby does have a practice. There you go. I'm plugging your stuff as well.
Thanks,
What's wrong with
Tim.
me? Anytime. Look, last question from, I don't know if this is somebody viewing or listening, but I'm a mother of 3. I just want to get Michelle's advice. Is there one expense I can let go to save? What is it? Like cheaper house or what? That's an almost impossible question to answer.
It is an impossible question without knowing what you're dealing with on a monthly basis. But of course, you can not necessarily cut out one thing, but perhaps reduce the amount you spend on a number of things, and that will have an overall benefit. Because sometimes, it's not possible to cut one thing out. It may be, I don't know what your personal circumstances are, so unless we write it down, I don't know. But perhaps just take a little bit away from each thing as opposed to trying to take out one thing.
Think through what you really need.
Absolutely.
And what you could maybe do without and not really worry about.
Pros and cons list.
But it comes back to that simple thing. When you sit down with somebody, I talk to financial advisors and people in finance quite a lot, but it's that thing of being honest and being open and saying, right, well, this is what I do. It's kind of hard to do that at first, isn't it?
It
I
is.
guess for a lot of people.
It's very brave.
It is. So if you can do that, then you're taking responsibility, and then you can look and think, oh, well, I don't really need to pay for that. Do I need that subscription? Not to take anything away, but you know what I mean.
Absolutely. Absolutely. And really write everything down. And it's very hard for a lot of people because, when you're spending on cards or just tapping to pay and all that, you lose sight of what you're actually paying for. And you really have to say to clients, take responsibility, keep a month's worth of receipts. And they look at you with big eyes and they think, wow, I had to keep receipts for a month.
You're a grown up, Michelle.
And you say, it will surprise you what you spend money on. And it's really just that learning experience. You just have to do it once. And, suddenly you sit with your receipts at the end of the month and you tot up all your expenses and you think, well, did I need to pay for that? It's just that realization event. And we also do it from a spending perspective. And we say, do it for a month. But take an amount of cash out of the bank and make envelopes. It sounds very basic, but it really helps people, and break it down into weekly envelopes. And you have that money in that envelope for that week, and you cannot overspend. And it really gives people a very interesting insight into spending habits.
Yeah. And if you've got a little bit left over at the end of the week, if you can get to that point, but until you get that habit,
Exactly.
you haven't got that habit, if you know what I mean. It's one of those
Yes.
things. I had a friend who did that years ago. She was leaving, and I'm just going to save money, and I'm going to pay myself a certain amount every week. And she kind of reduced the amount as she got nearer, and she left with a lot more money than she thought she would because she'd taken those steps. It's also the kind of one disadvantage of the debit card. Debit card's so handy in so many different ways, but it's so easy just to tap, and you're not paying cash that you've taken out, so it's very easy to
Yes.
lose
Yes,
control.
it is. And
Yeah.
that's why I said you've got to go back to basics.
Always go back to basics. Caesar's following up on his call. Follow up on the iPhone worth 5,000 dirhams. Michelle, Tim, please tell me not to buy the iPhone. So I'll let you do that because you can.
Caesar, don't buy the iPhone unless you absolutely need to.
I'm listening to you. This is the last question for you, and you've mentioned New Year's resolutions a couple of times. But if you're feeling a little bit squeezed financially at the moment, practically, what can you do to get things under control so that you've got a bit more security going into the new year, into 2026?
And that's circling back to something we've just spoken about, Tim. And sit down and be honest with yourself.
Right.
Take the time. It's not going to happen in 5 minutes, but make time for yourself. Sit down, work out your income. What are your compulsory monthly expenses? And be specific. Take it from your bank statements. Take it from your receipts. Don't guess. And then, work out exactly what your fixed monthly expenses are. Make your budget plan. Make sure that you've provisioned for those before anything else. And work towards your contingency financing, your emergency money. Make sure you work towards, if you don't already have it, work towards having it. So put money aside on a monthly basis to build up those cash reserves. Very important.
Okay. I said it was the last question. I lied because I just thought of something else. And you can blow your own trumpet here if you like. By the way, I like your purple glasses. I've been looking
Thanks,
at those.
I thought I'd put different ones on.
They pop. What's the best piece of advice you've given to a client to get ahead in tough times? What have you thought, I should can and bottle that?
Tim, there's so many. I've been in the industry 25 years, so you don't take anything for granted, and very often it's the small wins. But it's the when you've worked with a client for a long period of time, and you've seen their children grow up from very small children to going to university, and you've had a piece in that puzzle because you've helped the parents create aspirationally that dream for their child.
Right.
You've put the building blocks in place to enable that parent to pay for that tertiary education, which has enabled that child to go to university and graduate and go on to do whatever career path they've chosen for themselves. that is hugely rewarding, Tim.
I bet it is, yeah. That's like the money shot, isn't it?
Yeah.
That's what you do it for. Okay. Michelle Carby is from the Michelle Carby practice. She is let me just go back to my list here, financial expert, international wealth strategist. She advises clients on the cost of living planning, budgeting, financial security, and long-term wealth decisions. Good to talk to you. Thanks for coming back.
Thanks, Tim. Thanks for having me.
Do appreciate it. This is
Mira Business FM, Dubai's home of business radio.
This is Mira Business FM. It's the morning drive with me, Tim Elliott, and we're going to be talking recruitment and HR and jobs and stuff like that in a moment. Just a reminder, you can download the podcast wherever you get your podcast. Just search Mira Business FM and you can find whatever you want to listen to or view again there. We're on social media, of course. We're on the website, mirabusiness.fm, and also across most of the social media platforms. Contact us, info@mira.fm, and you can also WhatsApp the studio directly, whatsapp.mira.fm, or if you need the number, listen carefully, 522-789-567, and that should bring it up. Now, David McKenzie is back with us. David is the founder, the CEO, the head honcho, the big linchpin, cheese, all of that at McKenzie Jones, which is a recruitment firm.
You're going to call me El Jefe one day.
I'm thinking about that. Yeah, the chief or something. Nice to see you.
And yourself, yeah.
And you're back from Saudi?
The Magic Kingdom, yeah.
I know.
Got back this morning.
Everything okay?
Yeah, it's actually slowed down.
Okay.
Yeah, the kingdom slowed down a bit recently. I think PIF are restructuring their budgeting. There's a few of the projects may go on hold, the big giga projects.
Right.
And that sort of affected the whole of Saudi. But I love going there. I love the place. I like the Saudis. It's a really interesting place to work in at the moment.
You got a good thing going at the moment, actually, because you're kind of here and there, and I don't
everywhere.
mean here and there, there, and everywhere.
Flying out tonight again as well.
Well, you are, yeah.
I
So
know.
it's busy, isn't it?
It is. Look, it's busy. Interesting. I was just talking to my guys today about writing an overview on the market and their year. And I think the overall sentiment would be the first half of this year was fantastic. Recruitment was on fire. The second half has been quieter, and I think Q4 has been quite quiet.
Okay.
I think people are gearing up for next year. And I'm not sure what's going to happen next year. It may be a flattish year.
Well, that's one of the things we're going to talk about today, because one of the stories, we'll get to this in a little while, but it is nearly half of firms plan to hire more staff in 2026. We'll look at some of the top sectors. But there's also, so that's about 2/3, but the other third think, no, we're not. We're going backwards.
I think people are more cautious about hiring and the types of people they're hiring. So as a job seeker, this is a good time to reflect on what you want to do, even if you're not looking. And I talked to you about this before. One of my biggest concerns about people when they look for jobs is they do it instinctively. They go, right, I'm not happy, I'm going to look for a job now.
Right.
What you should do, it's a bit like training for a marathon. You've got to train constantly. So you've got to get your CV sorted, your LinkedIn profiles, you've got to connect with people, and you've got to be aware of what's going on in the marketplace all the time. It's almost like a full-time thing.
Well, that's interesting, actually, because that's another of the stories I want to talk to you about. One of the things that I noticed this week was recruiters talking about why December is the best month. And I don't know if it's the best month, but the best month to get hired was the headline. And that's kind of interesting, because some of the advice in there is, I mean, it's all relevant, don't get me wrong, but some of it is, it's a good time to do this, and there are reasons why they're putting forward that December's a great month. But, time to refresh your CV, time to get your LinkedIn profile up to date. But I'm thinking, shouldn't your CV always be up to date? Shouldn't your LinkedIn profile always be refreshed?
You
Really?
make a great consultant.
Not that mine is, because mine still had the open to work thing that I put on 5 years ago, and then somebody said, "Oh, you shouldn't be doing that. You're going to get loads of scammers." I was like, "Oh, take that off."
Did you? Did you get loads of scammers?
I seem to attract scammers. I get people. I'll show you a picture of somebody that was trying to scam me the other day.
A picture?
Yeah,
They sent you a picture?
I'll show you.
I think that's another type of scam.
It was a very weird scam. I'm blocking you. I don't like this. Leave me alone. I ran away like a frightened little boy. But that's interesting. But you should. It should be up to date all the time.
I think this is the biggest failing of candidates, and I see across the whole of recruitment, is that people start looking when they're either unhappy, they feel they're not going anywhere.
Yeah.
What you should do is you should constantly be looking. And the reason I say that is you're then aware of what's going on in the marketplace, the companies that are hiring, the companies you want to join, and also it keeps you fresh. You should be sharing articles on LinkedIn and really making yourself as available as possible. It's easy to say no.
Conversely, though, employers looking at that, your boss is looking at that thinking, he's going to jump, she's going to jump, where are they going to go? Why do I need them? I mean, there's always that. So, but you're smiling, so it's like...
It's not a bad thing,
so
is it?
What?
Well, I think, look, the relationship you have with your employer is a really interesting one. And I think if I look at my team, I encourage my guys to be honest with me, because if they're unhappy here and they want to look, I encourage that, because if it's something they're unhappy about and we can solve it, then we'll solve it. If we can't solve it, they don't like the company, don't like me or whatever, unheard of, by the way, it's worth looking around. Yeah. But the reality is, I think if employer says, well, why are you looking? If you're passively searching, we call it passive searchers, don't put open to work on your profile.
Right.
Because what you can do, whatever happens is recruiters look for people who've got the right skill set. Whether you're open to work or not, we'll always call you. So the more your CV or your name comes up in a search on LinkedIn because you share content, you're connecting with different people, you're very active on LinkedIn, the algorithm pushes your profile up. We'll see it more.
There's another thing here, isn't there? That it's your relationship with your company, with your employer. It's important. Of course it's important, but it's not a personal relationship.
No.
And I think people get, I've been guilty of this in my life. I've always thought, I'm really passionate about this. Probably not, but I felt that way, and I felt it was kind of the only thing, and maybe paid too much attention to it, and got a little bit too much involved. I was never that distant. It's different if it's your thing, I guess.
Yeah.
But I think a lot of people confuse the personal side with the business side.
Yeah, but if I look at a couple of my people in the organisation, they're really passionate about MJ.
Right.
They really like working for the company, and that's reflected in how they perform in the business. So I think you really have to have a sense of pride in the company you work for, or a sense of you enjoy working there. Now, that may only happen 80% of the time.
Right.
The other 20%, you hate it. You hate going in. It's a terrible day. Your PC doesn't work, and the coffee tastes like rubbish. Fact.
Is your coffee not good in the
Our
office?
coffee's amazing.
I thought it was
really good. It had to be.
It's
So,
good to
but on a serious note, you've got to feel like you're engaged with your company, or else there's no point in working there. But there are people that work just to live.
Yep.
And there are people that live to work.
Yeah.
I'm the live to work. I love working. I love my job. I like Mackenzie Jones, but I was equally good when I worked for another recruitment, and when I ran Monster, I loved working there, and I put my heart and soul into it. Now, ultimately, you've got to remember, a company at some point may let you go. You may not be in vogue. You may not be relevant, and you have to then be dispassionate and go, okay, maybe my time is done.
It's hard for people, I think. Isn't it?
It's hard for it's like when you break up with a woman, and that's happened to me an awful lot. It's
like when you break up, or they break up with you.
They always break up with me. Right. Never the other way around.
But it is. I mean, but you're right.
It's a very.
I mean, we laugh, but it is an emotional situation.
Yeah, and when you get made redundant, and when you leave a company, there's a grieving process that you go through.
Yeah.
And especially if you've been there a long time, because you feel like they've just thrown you out, and you don't. What have I done to deserve that? I've given you 10 years of my life, and you've got rid of me. So what you have to do is analyse why they've got rid of you, and have that communication with your old company, and figure out why. And so you go through the process of understanding and accepting, and it really is. So one of the things we look at whenever a candidate phones me up and says, I've been made redundant, it's not a bad thing, by the way. It's just the company's shifted, the market's shifted, you're not right for that particular role. You just have to understand, right, how can I use that when I go to a new company? How do I explain what's happened?
It's always the case, though, because I've been through this. I remember when I was made redundant, I talked to you.
Yes.
This is a long time ago, but it was, I probably still feel it, if I'm honest. I thought maybe you didn't keep your best. You could have done better. But I mean, that's a different thing. But you're right, and it is a tug, and there definitely is a grieving process, and you do get to a point where you go kind of through all those stages, and you end up at acceptance. And because if you don't accept something, it's going to always negate.
But recruiters understand that, and I think employers understand that, because some of them have been through that process as well. Yeah. It's not a doubt. It's not a bad thing being made redundant. It's not a bad thing leaving your job. You just have to accept. If you get fired, it's a very different story.
I guess so. Yeah.
Because here the culture is not so much a firing. It's more about letting people go and letting them move out of the organisation. It's probably a bit kinder than some of the European countries where you literally get fired.
Yeah.
You have 3 warnings and you're fired. So, but I think you've got to understand that may happen to you at any point in your career. So what you have to do to mitigate that is constantly look. And if your boss says to you, "Are you looking?" say, "No, I'm not looking, but I'm always active on LinkedIn," because you never know what might happen. In your boss's head's going, "He's a really good employee, she's a really good employee. They're not looking, but if somebody contacts them, they might move. How do I look after them?" It's a reverse psychology to a degree.
I guess there's an aspect as well, though. If you're active on LinkedIn, you're active at following up on, whichever area you work in.
Yeah.
So you're keeping up to date with trends and perhaps training and whatever else. So there's always that side as well.
Articles, you're sharing your views on the marketplace, you're becoming a thought leader. Those are the things you need to do to become valuable to a recruiter or to a potential employer.
Are thought leaders still a thing?
I think they are.
Yeah?
I think we call them influencers now, don't we?
Something like that, or content creators. I'm not sure quite what it is. I know. I think content creators are okay. Influencers maybe less so. But I think also, to be fair to somebody that does influencing, now I think it's a much more established field. I think we've weeded out kind of the, I'll get out of bed at 12 and do an ad for a coffee company.
No, I don't
It's
like
a much
coffee.
more professional process.
Yeah,
now
look, we
than it
know
was.
Alex, Supercar Blondie, and she's a prime example of somebody that was passionate about her cars and then made that passion her job. And we know she works really hard at that.
She's killed it. She really has. She's
so good, isn't she?
brilliantly
Yeah.
well. She's very good, but then she always was. She was always super hardworking.
But she's such a lovely
deserves it.
I bumped her in on the beach the other day, and Elsie, there's a blonde lady looking at you, and Elsie's my wife, and I went, "Oh, fantastic!" I looked around, and Alex went, "David." I went, "Hey, Alex." A little disappointed. It might have been somebody looking at me, but
Yeah, but it was just that moment. That's enough. When you get to our age, that's plenty.
exactly.
There were loads of things I wanted to talk to you about. We haven't even started yet, and it's
Normally.
we're nearly halfway through. So nearly half of firms plan to hire more staff in 2026. Top sectors, is that true or not? Recruiters revealing why December is the best month.
Yep.
We'll try to get to that. Unfair appraisals is, I thought, quite interesting. Network in the UAE, but I thought we'd start with the thing that you sent, because this is good, and this is kind of where we started. Job search tips that will help you land your dream job. Now, this is an article that you sent through, and I thought maybe if you're job hunting now, maybe we start, in order and start with the top job search strategy for finding a new job, and that is networking.
Yeah. UAE is brilliant. Saudi's brilliant for this because you should always network constantly, always connect up with people, ask people's advice. If somebody asks you for advice, give it to them.
Yeah.
If a journalist phone you, speak to them. All those sorts of things. And networking here is brilliant because when people are looking for their job, don't go to recruitment companies first. Don't go to LinkedIn. Talk to your network of people.
Okay.
I'm actively looking. So if you've built your reputation in your network, like you're a procurement person, you've shared stuff about procurement and you understand procurement, you've networked with all the senior people, contact each one of them and say, "I'm thinking of looking. Do you fancy a coffee?"
So staying connected is kind of the first piece of advice, isn't it?
Yeah, you've got to be connected.
Okay.
Yeah.
And that's easier than it ever was previously.
Touch of a
social
button.
media.
It's
Yeah,
so easy.
yeah.
You can do. Obviously, don't. LinkedIn and Instagram are two separate things, by the way. This might be a revelation to some people, but it is.
Yeah.
Don't post pictures of yourself on the beach with your kids on LinkedIn.
No, that makes sense. Okay, so I've had discussions with people about this lots and lots of times,
Yeah.
but the thing is to be platform specific, I think
Yes.
was the phrase this person used,
Yeah.
but also just to be how you are at work on LinkedIn.
Yep.
The attitude should be front and center in your head, and Instagram is for the other stuff. That
Yeah,
you do.
the you as an individual, you as a
Yeah.
person, you as a family person or whatever.
Okay, and you look at social media, don't you, as a recruiter?
Yeah,
That's
so
the
interesting.
thing.
When we hire people, the first thing we do is we check out, does their CV match their LinkedIn or vice versa?
Right.
Then if we're getting to a process, we go, right, let's look at their social media. If they're open on Instagram, only if they're open, and Facebook, we don't look at Facebook. Right. What's their social impression? Because if we're recruiting in Saudi and you're constantly brunching, that could be an issue.
Yeah, okay, fair enough. So you start to build up a picture, don't you?
Absolutely.
Not to say, and I guess I'm kind of, it's a moot point really, but you're not judging people on this. You're trying to build up a picture.
We're trying to build up
Put things together.
If we're recruiting for a particularly conservative company,
Yeah.
and there's a picture on Instagram with you doing social things that you shouldn't be doing, they're going to find that.
Yeah, for sure.
So you've got to be aware. But if you're, likewise, if you look at my Instagram Generation Try, it's all about sport and stuff like that. So that's an open one.
Yeah.
You can look at that. There's loads of pictures of me just racing in Lycra. Not the best view, I must admit.
But a word's failing me at the moment.
I'll send you some. But I've also got a private Instagram, which is for my family only, which nobody else can see, and this is my family stuff. So make sure you don't blur it too much, because I think the modern generation now, they see it all interlinked, and it shouldn't be.
Right, okay. So it's compartmentalizing.
Absolutely.
Really. Okay. The second thing on this list, this article, is professional communities. So different industries have online communities. They may have dedicated job portals. So there's your network, but there's also this kind of, not secondary network, but there's another network.
Yeah, so example, if you're in HR, there's CIPD here, which is probably one of the best well-known professional qualifications. Right. And they hold events, they do talks, they have social gatherings. If you're an HR person and you're not in that, you should be, because that's where the informal network starts working very well. You'll go to a coffee evening or something, and you'll start talking to an HR director who works for a very big company, and I'm thinking of looking around, they might go, we've got a role that's coming up. That sort of informal network works very, very well.
Do you know what's interesting about networking is the fact is, and networking is quite difficult to do for a lot of people.
Yes.
Because not everybody's kind of overtly social or confident, I think is probably the right word. But it's also that thing that sometimes it's difficult to kind of say, look, I'm looking for something. It's as though you're asking for help, and you don't want to seem.
Yeah, no, honestly, that's a very real thing, and I think you talked about the introverts and the people that aren't that particularly engaged and don't want to go out of their way to sit in a room full of people, because it takes some courage to do that. I must be honest, and I do a lot of speaking, and sometimes I walk into a room, there's like 150 people, and they're going to listen to me talk, and I go, I hope I'm good.
Is that your first thought?
It is.
I really hope I can do this.
Hope I can pull this one off.
But it's interesting. I mean, you say that. You're a very confident guy. You've interviewed lots of different people. You do lots of public speaking. You do lots of stuff on the radio. You've done stuff on the TV. So you would think you're used to it. And if you still feel that, there's a side to that, I think, that's important. There should always be like a nervous...
Anxiety.
Not anxiety, a buzz. Before you go on stage.
I talked to the conference in Saudi recently, and it was to a huge HR conference. Yeah. And the majority were Saudi nationals. I get on very well with Saudi nationals. I like them as people. I think they're very respectful. But I stood on stage and I looked at all these white, Kanduras, and I was like, these are very influential people. Okay. If I mess this up, it doesn't just reflect on me, it reflects on Mackenzie Jones.
Sure.
So I make sure I prep before. Everyone thinks I ad-lib stuff, like we do now.
But I never thought that.
But when I do these conferences, I really prep. I write my notes, I prepare beforehand. Yeah. And I never I never hold anything up when I'm presenting, because I talk from memory, and I do sort of ad-lib a bit. But I do get nervous, before whether it be a small networking session or something, because I find that makes me a bit more, I'm a bit more on edge, and I'm a bit more, I sort of get a bit of fire in me, and I just feel a bit more alive. It's like when I first start a race, an Ironman or something, when you're standing by the start line and you're in your wetsuit, another image you don't want.
I can't get these out of my head now. It's lycra and wetsuits today. I roll on the weekend.
But there is a sense of you are super nervous. But as soon as the gun goes off, you're fine. So as soon as I start talking, absolutely fine.
Yeah. Okay. Yeah.
So going back to if you're not good at doing those conferences, do virtual ones. There's lots of webcams where you can sit and you can watch people doing them. Start doing it that way. Try and go out to meet people for coffee. By the way, I'm very aware that this current generation of people, a lot of them are introverts. So you need to adapt how you network. And maybe you just network through social media like LinkedIn. You don't go to conferences. You try and you log on to various webinars, etc., those sorts of things. Just build yourself up gradually.
So the connections are really key, aren't they? So that's kind of the first 2 points, really. Yeah. So networking, professional communities, building up your network and your connections with people. The next thing is, and you said this earlier, actually, don't start with the recruitment agency. Start with talking to your network and extend that out. But then it's time for the recruitment agency.
I say that because I'm a recruiter.
Yeah,
don't start with us first, because use your network, because I get lots of calls from people saying, I'm thinking of moving. And I go, well, why? Tell me why first. And a lot of them go, well, I'm just a bit bored. Well, tell me what you're bored about in your job. Have you talked to your boss? Sometimes I advise people not to leave their jobs. So I think when you're looking for your next job, use your network because they're aware of you, they know of you, and they're your peers.
Yeah.
Now, it's very difficult to ask them for jobs, so you don't have to say, look, I'm very interested in your views on the job market. How's it going in your industry at the moment? You don't actually say I'm looking, because if they're smart, they'll go, are you looking? You go, yeah. So just build a story and just keep the connections going, share articles and stuff. You'll start coming on people's radar. Once you've done your professional network, talk to the recruiters, talk to your specific recruiters. So I do HR. If you're in HR, talk to me. If you're in finance, don't talk to me because I haven't got a clue what you do. I have a finance guy that does that.
I love how honest you are,
So
David McKenzie. Here's another one, and I guess my guess is you're pretty good at this. Following strategic decision makers. So this is subscribing to like personal social media pages of people that you respect.
I'm not. I think you've given me
managers.
too much credit there. I don't follow people who are what I would call influencers in my marketplace. So there are certain HR people that are always doing conferences. I don't tend to follow those people. I like to follow the people that are a bit more genuine.
Right.
So I like to follow the people that post about how tough their job. Have they got any questions? How do I deal with this particular situation? And I don't follow all the people that go on the conference circuits. I tend to follow the people that I perceive who are really good in their companies and have done really interesting things.
Okay. That interests me because I look at posts and I look at people in this particular industry, and it's usually people doing events and conferences and that kind of thing. And the usual line is, I was so thrilled to do this. And I always think, no, you weren't. And
No,
please.
you were
just stop.
paid.
Yeah, you made some nice coin and that's good. And I know that's a single approach. There's nothing wrong with that.
No.
That's okay. But, that's just not an authentic post to me to use that.
And that's a really good point, because you'll find lots of people on LinkedIn talk about how great they are and what they've done and but then you delve into it and you think, actually, look at their profile, look at their background. The people you want to identify are people who can help you. Those people who do the conference circuits have probably got hundreds of thousands of followers and they'll never speak to you. Talk to the people who are in your particular industry. If you're in HR in packaging, look at who the key people are in that industry and identify with them.
That's really interesting. Okay. Maintaining a strong online presence. I'm guilty of being really bad at this.
You are terrible.
I am really awful at this. Yeah. Have you noticed that? Have you noticed
No,
how bad I
I
am?
blocked you now because it's so bad.
Thanks very much. He never says anything. There's so many posts on this place. I'm terrible at this, I know, but it is really important, isn't it? Keep your LinkedIn profile up to date. It's not about refreshing it; it's about keeping.
But
it
you
up to
think
date.
about how successful this radio show's been from the start, in terms of how many. No, but it has genuinely, and I'm not going to come on here if I didn't think it would be an interesting conversation. And we've always had interesting conversations for 15 years. But
Yeah, this is true.
But if you share what you're doing, you're going to have more people listening to people like me and James and the Marine guy, who have got interesting things to talk about. So then we're more motivated. You're going to get better. You're going to get better guests coming on. You're going to upgrade your guests from me. But you know what I mean?
You're right.
The more
You
you
are
do,
right. Yeah.
the more people are aware of Mira and FM and what you're doing, and then they're going to listen in. And once it goes on FM, which I'm sure you're going to do at some, it'll be constantly on the radio. And I think your success needs to be pushed through your social media. And you guys are really good at it now, because I'm always sharing stuff. All your guests share stuff. So suddenly, if you look at your Mira FM, it's mushrooming. It's going to just become a much bigger business.
I mean, we started from a very low base, obviously, because this is a new thing. So you're right, and things do grow. It's just keeping on top of it all the time, because actually social media is kind of a job. It's kind of an additional task every day, isn't it? That needs to just be, consumed.
Yes.
Within your workday.
And don't, when you're as a professional on LinkedIn, don't think you have to post every day. Don't think you have to like everything every day. Spend maybe an hour each day on your LinkedIn. That's it. Don't do any more than that.
Okay.
Because it'll become, you've got a day job to do and you've got a life. You can't get sucked into it. Because I do see people on LinkedIn constantly, and it stops adding value after a while.
It's always the same folks as well.
Exactly,
Isn't it? Yes, I know. So the next point. This is worry number 6. Attend job fairs both in person and virtually.
Yeah, no, I'm not a great fan of that.
Not sure about that.
No, I think
Are they still job? I didn't know there were.
I tell you what, there's some really good Emirati job fairs. They're really good.
Okay.
But I think generally for the general, no. I just don't think I don't think you need to attend job fairs anymore. I think they're a bit of a thing of the past, personally.
Well, that would be my thing, but that's from this article. The last one, and I think this is important. So, tailoring your CV for one industry is one of the strategies. Streamlining efforts. I mean, clearly a sensible thing to do because that's targeted. It's sensible. You're not wasting anybody's time. That's obviously a bugbear of yours. But choose your employer is the final heading. Go after who you want to work for.
Yes.
Which I think is good because there are many different aspects to that.
Yeah.
The way you've targeted, it shows focus, it shows willingness, it
Understanding.
shows desire, understanding.
Or you can do what I do and just flip-flop into whatever career you find.
I said to you just now, I appreciate your honesty. Don't be too honest.
No, I think, look, I've only had 3 jobs. I worked for Michael Page for 8 years. I ran Monster.com for 6 years, and I've worked at Mackenzie Jones for 20 years. So I've chosen my careers because I wanted to work for those companies, especially with Michael Page at the time. And I've had a really good career. So I can look back on my career and go, I've really enjoyed it. I've had some downs and ups, but it's been good. So I think now I got offered those jobs, people headhunted me. I don't think that happens as much anymore. So you need to, if you're really serious about your career, you've got to have your top 20 people you want to work for. Now, don't make it Google, Apple, Microsoft, because everyone wants, but in your industry, if you want to work for some companies, like we work with Altair, they're a great business. They're becoming a company people want to work for. So I'm saying, right, build your reputation with a senior management team in Altair. So you need to have 10 of those companies. Build your reputation with them internally. Don't stalk them. Build it. So when they've got a job, they go, "Who's been in contact recently?" David. Great. Let's give him a call.
Okay.
Cut out the recruiters.
That makes a lot of sense.
Yeah.
And it's also if you approach a limited number of companies, the people that you want to work for, not that you think, "Oh, there's a job going."
Yeah.
What that means is you can research them better, you don't waste time, and that it's also easier for you, I think, as well.
And also you start building up an interest. So when you're in the interview, you go, well, why do you want to work for XYZ? Well, you launched this product in 2022. I've seen that you've hired this really good person. I've seen that you've got a really innovative score on social media. You start talking about it with a sense of passion and real understanding. If I'm an employer sitting on the other side of that, I go, wow, this person genuinely wants to work for me. Those people spend longer in those companies, by the way. Their work tenure is longer.
Let me just ask you a quick question. You've basically you were in the army for a while.
Terrible soldier.
I know. Yeah, but I mean, very good at building bridges. You were good with the pontoons, weren't you? Or something. I don't know.
Well, some sang. Let's not go into that.
Let's not bother. But then you went into recruitment, and that's where you've been.
Yes.
Right. So you must have known. I really. This is what I would like to do. I fancy doing this. This I think I could do well because you've done it for so long, and obviously you do it well. But how did you know?
It's a good. I didn't know actually, if I'm honest with you. Okay. So when I first got into recruitment, I wanted to do a sales role because I thought that's what people did. I left the army and did a sales role. Right. But in reality, when I got into Michael Page, I suddenly realised that what I'm really good at is talking to people, engaging with them, talking to clients, and I suddenly found myself in a space I really enjoyed, and they cultivated me. I was there 8 years. I was a director at 27. I was a very young director. They really gave me a good chance. Then I went to work for Monster.com, and I became a .com, and I loved that. But while I was doing my .com days, I suddenly realised I missed recruitment. Really missed it. So that's when I went back to run my own business.
Okay.
So don't be afraid to pivot in your career. But by the time you're 30, you should know what you want to do. You genuinely should. These people that keep changing careers every couple of years, the problem is you're going to end up, like my age, with no definition of what you want to become at the end.
No, that's fair. Okay. I still don't know what I want to do when I grow up, by the way, if I'm really honest.
Well, you've got a long way to go, so you're all right.
Let's hope. Is that why you were a terrible soldier? You
No,
just talked
can
to
I
people
explain
too
my
much.
army career? So I went to Sandhurst and I was going to go in the artillery, and I messed it up a bit and didn't ultimately go into the army. So I'm a. But
Your father was a soldier as well,
Yeah,
wasn't he?
my father was a combat soldier. He was in the Omani army for years. My son is a Royal Marine.
Yeah.
They're really good soldiers, and there's a little. I'm like the meat sandwich, the meat that didn't really work out.
No, yeah, you're like the mayonnaise really in the sandwich, aren't you?
Yeah, I don't even think I was. You can't really say I was in the army. I was in there about 35 seconds. But in all honesty, and this is a serious note, I had a chance to go back. They were making redundancy in the army. I was going to Sandhurst. They put us all on hold for a year, and I got a job in Michael Page. What I should have done, they called me after a year and said, "Mr. Mackenzie, I love that, sir. Would you please come back?" And I was like, "Hey, I'm having such a good time in recruitment," and I was.
Right.
I didn't go back. I should have gone back and done 3 years short service. I would have loved it. That's one of my few regrets in my life. I should have gone back. But who knows what could have happened? I may not have discovered recruitment again. Who knows?
Yeah.
So,
Yeah.
but I'm living vicariously through my Royal Marine son at the moment.
Yeah. Well, sometimes they say things skip a generation, don't they?
Looks, brains.
I know. All right. Well, that's basically kind of covered the article, really. Anything to add to that? Top job search strategies. So let's just run through very quickly. Networking, professional communities, recruitment, then strategic decision makers, following the right people, being aware of the right people, maintaining your online presence, job fairs. Neither of us were very sure about, but the making the effort to really choose, to really target your employer. Anything you would add?
Yeah, the final one is connect with a recruiter. Recruiters, it's a bit like, do you remember that thing? A dog's not for Christmas, it's for life. Recruiters are the same. If you build a relationship with a recruiter, they'll be with you for 20 years. I've got candidates I placed when I was 25 years old. I still talk to them now. That relationship is a really enduring one if you find the right person who can give you advice and guidance. In many ways, they should be the first person you go, "Look, a bit unhappy about this. What are your thoughts?" And I'll go, "Stay. You've got a great job. Don't move." Or, "About time you moved."
My careers teacher at school, careers master, he was called,
Showing your age there.
was an ex-head boy. I know, yeah. He was an ex-head boy of the school, right?
Oh,
he was a
okay.
geography teacher. And I think once or twice in your final year at school, you kind of sit and people would say, what are you going to do with your life and all this stuff. And at my school, it was always, you go to the city because it's just
really?
outside of London, yeah. And I can remember being sat there thinking, have you met me? I don't think that's what I'm going to do. Or you go into insurance. Again, have you met me? No, so that was never going to be a path. But I do remember thinking with the recruit's kind of advisor guy, I remember thinking, so you were head boy of the school, you went to university, got your degree, got your teaching qualification, and you came back to school.
To be a careers advisor.
To be a careers advisor. And I wasn't I wasn't over enamoured with that.
But
Excuse me.
But have you seen them now? Your wife's a teacher, isn't she?
My wife's teaching.
Yeah, so I think the careers people are really good these days. So
It's a completely different game now. Yeah, so I get why you're saying the relationship with your, with a recruiter can be a lifelong relationship.
it can be, and I think pick the right one who doesn't just try and place you in a job, because you should every year check in with your recruiter whether you're looking or not.
Okay.
Have a coffee with them every 6 months or a year, whatever. Just keep connecting with them. I mean, I've got candidates I've placed 3 times. I'm still in contact with them. We have coffee, catch up. How's it going? Not happy about this. It's more of a sounding board for you as a candidate.
I feel a bit inadequate in this because I don't have a recruiter.
Your industry's a bit unusual because you're all creative types, aren't you? So I don't know.
I don't think I'm a creative type at all.
Don't you? You're the most creative person I know.
I don't even know. People say, "So what do you do for a living?" I'm talking.
You could say I say recruitment consultant. Let's face it, that stops the conversation usually in a heartbeat.
Yeah, well, talking's always a good one. It's like, what do you mean talking? Talking about what? Why do you talk?
Yeah.
Well, so I guess it's a conversation starter in a weird way. Hence, we're back to talking. Oh, it's all full circle. You make a good point. What would you like to talk about next? I'm just going to look through. There's so much stuff to do today.
The bit about people hiring for next year, I think this is a bit of a misdirection.
Yeah.
I think the reality is next year's going to be the first quarter will be quite interesting. I think it'll be quite good.
Right.
I think the year may sort of I don't think it'll be as meteoric as it has been this year. I think that statistic that the Khaleej Times have put about 50% of employers are going to be, of course they're going to say that, of course 50% are going to be recruiting. I think the interesting thing is, I still think there are too many candidates here and not enough jobs. Just giving you a broad brush
Generally
approach.
speaking, well, you're very consistent with that.
Yeah,
absolutely.
but I think that if you're a good candidate, you will always find a job. You just may have to work a bit harder at it. So all the things we've talked about in the first hour, this thing about selecting employees, that's going to make you get a job next year.
Right.
So I do think, look, I'm in an industry where I want every year to be really good. So far, the last 3 years, we've triple-digit growth. We've had amazing growth. Next year, we're a bit concerned about next year with the property, with Saudi, with the dollar, with Mr. Trump, and with the oil prices. All these things are going to affect the job market. But the good thing about the UAE and Saudi, and this is what I love about living here, and this is why I've been here so long, we've got a great ability to reinvent ourselves. And whatever happens, there'll be a surprise in store for us next year, where the UAE will, blow it out the door again.
That much
No,
you're absolutely
we know
right.
20 years, every year's been the same, isn't it? It's brilliant.
Yeah. Well, this is a survey from Cooper Fitch, right? And it's UAE and Saudi. So if you take just a couple of the points from it, so nearly half, 48% of companies in the UAE, Saudi plan to hire more people. Okay, so that would be kind of a sentiment, I suppose. Central Bank expects real GDP to expand by 4.9%. In 2025, 5.3% in 2026. So strong, very strong growth.
Very.
Non-oil GDP expected to grow 4.5% this year, 4.8% next year. So again, strong. Hydrocarbons, 5.8% this year, 6.5% next year. So on the basis of that, the market looks very promising.
True.
Here. Okay, so that's a given. Over the next 5 to 6 years, particularly here in Dubai, lots of big infrastructure projects.
Yes.
Population is growing. We need more roads. We're seeing that, of course. We need the metro. The new airport, as the current airport reaches capacity. So you have to feel that it's a very strong situation for work. But your point, I think, is the counter to all of that population growth is such that it's a lot more competitive. And it is so much more competitive than it was 2 years ago, 5 years ago, 10 years ago.
Employers have more choice.
Well, they really do.
And salaries are going down, real term. But I think Cooper Fitch are a great recruiter, actually. So the guy that runs that, Trevor, he's got his finger on the pulse. He knows
those are
these
quotes
things.
from Trevor Murphy.
Yeah, he's a good guy, and he understands the market. But I think the reality is 48% of the companies are going to be recruiting. Of course they are. I could say that without actually doing the stats, because they will be. Okay. What we want growth in new industries. We want new opportunities here. We want, like Saudi's built the Giga projects. Dubai's growing AI. It's becoming the AI hub of the Middle East. There's so many things that the Middle East is doing. Let's face it, if you're looking for a job, the place you want to be is not in Europe or not in Australia, it's here. Because this place has got the capacity to keep growing exponentially each year. It's amazing. You look at the fiscal policies of the UAE and Saudi, and they're strong. You sometimes wonder how it keeps going, but it does. And
I often wonder how it keeps
20
going.
years it's been doing it. I mean, I built my business in the UAE. We're a UAE and a Saudi company. I'm super proud of what we built, and honestly, it's down to what's been going on here. It's just amazing. And I think next year will be, but we need to be aware it's going to be quieter. It's going to be a slightly more flatter year, I think. And I think the back end of the year we'll see more of a surge, so half two.
Okay. What about in terms of sectors? Just very quickly, because this is part of the article. Aviation, defence, aerospace, space displays some of the strongest expansion signals. Public sector organisations anticipate some fairly significant increases as well. What would you you add to that?
Public sector, we're doing loads of work in Abu Dhabi with the ministries and the authorities down there. We're also seeing some of the family groups are starting to really pick up at the moment. We've seen a lot of the multinationals be quite quiet this year in terms of growth-wise. Their growth has been mainly Saudi. So if you look at Saudi, we're doing lots of local family groups. We're doing lots of ministries. We're seeing AI and cyber. I mean, that's off the charts. The telecoms companies in Saudi are doing a really good job. They're picking up lots of people. But there's so many new sectors that are starting up at the moment. And, you look in Saudi, you've got things like Qiddiya, which is the water parks, the theme parks. That's booming at the moment. really well. They're doing a really good job. In UAE, we've got all the infrastructure growing. So if you look at all the big infrastructure companies like Parsons, they're doing very, very well. The developers are doing well. Again, I think that's gonna rationalize at some point because there's so much being built.
You think at some point, but on the basis of evidence so thus far,
Again, I don't
know.
I don't understand this. I just
I know.
we could talk about this forever, and I understand how business succeeds in the UAE because the UAE government and His Highness has done a great job attracting really good companies here. On back of the bat, they've attracted really good people, and they've created a very good business economy here where people want to work here, they want to stay here, and they want to live here. It's happening in Saudi now. Saudi's behind because to live there, it's more difficult, especially if you lived in the UAE.
Yeah, that makes sense. Okay, so final question for you. We've got 5 minutes left. This was an article in Khaleej Times. It was Tuesday this week, written by Nandini Sarkar, who is a friend of mine I used to work with. And Nandini's a real, it's kind of old school, a real quality journalist, I think. And if you read the article, the different points of reference, the research she's done, the people she's talked to, it's really interesting. But the headline is this: recruiters revealing why December is the best month to get hired. So my question to you is December the best month to get hired?
No.
Well, the thrust of this article is that it is. There are a number of reasons to assume that it is. I'll go into them in a sec. But why is it not?
Typically, we shut our month off on the 15th of December.
Okay.
Nobody gets hired after that. There's a number of reasons. One is people are on vacation. And by the way, I'm not talking about expats here. Nationals as well.
No,
everyone takes a festive break.
Across the board, yeah.
And because we've become an international city, the sort of December time has become an international holiday. We have Christmas, etc. Other people have other things. So I think you're finding, what we do find in the first half of December, more people interview because they're more freed up. They've got a bit more time off. They've done their budgeting. They're a bit freer to interview. But virtually nobody gets hired. December is our third lowest month.
What's lower than December?
February. February. Yeah, February's really bad for us. And also,
too many people in the gym trying to use their memberships that they will get rid of in March.
Exactly.
Yeah, I know. But that's interesting. So the thinking is, the main thrust of this whole article is it's a month when being alert, visible and active on portals can quietly push an individual's profile to the top.
Very
Recruiters
true.
have a little bit more time,
Yeah.
as you said. Yeah. So while the world is assumed to be asleep, proactiveness during this period can actually get you a first foot in the door.
That's absolutely spot on. I think if I look at my workload now, it's probably the lightest I've had for 12 months. And I look at my recruiters.
You're going from Saudi this morning, you go to Saudi, you're back tonight.
Yeah, but you know me, I work constantly.
Yeah,
I'm surprised I actually have a family life. So, well, I don't really, but anyway. But my point is that if I look at my recruiters, we're preparing for next year. Part of that preparation is updating all our candidates, updating all our clients, asking what their plans are. So it's much more of a communication time, December. And it's a nice one because they go, what are you doing for your break? Are you going away? Are you working? You know, what are your kids doing? It's a nice, the kids are off for like 6 months, aren't they, or something?
Yeah, it's far longer than it needs to be. Although the traffic
I love that.
difference is made is fantastic.
But that's what I mean. It's a lot more. People use it as a time to catch up. And I think December for us, we catch up with clients, we catch up with candidates. So in that respect, I think Nandy's absolutely spot on.
Yeah. Here's something else. Most HR leaders use December to finalise their hiring plans and secure talent to meet their next year's necessary hires to meet their company's business targets.
Yeah, I've done that already.
That's
yeah, December's too late. I mean, if you got to remember, most people are here at senior level on 3 months' notice.
Yeah.
More junior people are 1 month's notice. So if you're hiring now, they're not going to start till February.
Okay. That's well refuted. Let me just put another couple of things here to you. Contrary to popular belief, December remains a high-value month for recruitment in the UAE. We often experience quicker interview cycles, faster offer rollouts, and strong demand across real estate, engineering, banking, finance, construction, FMCG, hospitality, logistics and technology. Phew. This is a recruitment manager at another agency. From our experience, this person says, December often shows faster decision-making compared to other months because clients want to complete their hiring before year-end reporting.
Nope.
Nope, don't agree with that. Okay.
People, honestly, as we get past November, the hiring process slows down, if anything,
Okay.
because people have got other things to sort out, budgeting.
Is there some truth in that? In that it's the companies that maybe haven't got it together. Would you want to go and work for them if they're leaving it that late?
Some people.
Is that a way to read it?
I've got a brilliant client. I love them to bits. They're the most disorganized business in the world. They love their people. They look after them.
Right.
Honestly, they delay, procrastinate, but then they hire immediately. but I love them because nobody leaves them because they're just such a nice company to work for. But they're just so disorganized in hiring.
Yeah.
And
so
my best mate is the head of talent.
Okay, so that's not really a reflection.
No.
What is true though, and I think you'll agree with this, recruiters and hiring managers' availability is higher, fewer
Yes.
new projects being launched, final weeks of the year, it's the wind down time. You may have a better chance of
You
talking.
do. I mean, I do a lot of my lunches, breakfast, dinners with my clients and candidates in December because I'm not travelling as much. I say that I'm flying out tonight, but I'm going to be back I think I'm back on the 20th for that whole Christmas. I stay here I've always stayed at Christmas as well.
Okay, so you're off to the executive lounge at Dubai International?
No, I'm going Fly Dubai, actually.
Oh, are you really?
I love Fly Dubai.
Very nice.
Fly NAS and Fly Dubai are my chosen airlines.
Okay, well, I hear good things about them.
Both good, yeah, very good.
David McKenzie is the big head honcho, El Jefe at
Love that.
Mackenzie Jones. Good to talk to you. Thanks for coming in.
Take care.
This is Mira Business FM.
Mira Business FM, Dubai's home of business radio. Mira Business FM. The sound of success.
It's the morning drive here at Mira Business FM with me, Tim Elliott. Good morning to you. Don't forget, you may be with us on the website mirabusiness.fm, but there are other ways to watch and listen and get involved across social media, YouTube and Rumble and Dailymotion, etc. All the podcasts are available wherever you get your podcasts, I think the phrase is, and you can do that just by searching Mira, M-I-R-A, Business FM. Get in touch with us, info@mira.fm, and WhatsApp as well, whatsapp.mira.fm. I think that covers it. It does. So it's time to talk personal finance now. James Thomas is here. He is an independent financial consultant, and it is a pleasure to see you, Jason Statham.
Good to see you too. Thank you.
The real Jason Statham
real
was
Jason.
in the Emirates.
He was.
This week or last week? Was it this week?
Weekend,
It was
yeah.
this
Abu
weekend,
Dhabi
yeah.
Grand Prix.
Yeah, that's right. There you go. But you've often been confused.
I don't know about often, but you like to make the confusion.
I do. But it's funny because this used to be like a radio thing and nobody knew what you looked like. But now people are
know.
going, he is a bit like Jason Statham.
Only now you've said it.
Yeah, I know. There you go. It's certainly not an insult.
But it's not a
face it.
bad person to be compared to.
Very successful. Really, the Sylvester Stallone of now.
Yeah.
In lots of ways, as an action star, I suppose. So there you are.
Anyway.
When you're doing your Iron Men at the weekend, Jason's throwing people off buildings or whatever they do in movies. Look, this week, let's get to the topic. It's ethical investing. And this is kind of interesting because yesterday morning we had an Islamic finance expert in here. So we'll come to that as well because, much of the way Islamic financing works or Islamic financial products work, it's very much based along ethical lines. It's about its contribution to, the social fabric kind of thing. So we'll come to that. But there are ways that you can be ethical in conventional finance as well, if you want to be like that in your investment life, if that fits with your ideals. Let's just start, James, with what the term ethical investing means, how you would, the definition is a good place to begin.
Yes. I think it's because it's... Just to rewind a bit, I think it came out of last week's conversation about different types of investing, and it triggered a thought process to move on to this week.
It did, yeah.
Ethical investing, it's a very broad term. I was looking for some definitions, and as you've already described, it's really just thinking further about your investment. If we go back to where we started, building your future, a lot of people now have ideas that they would like their money to be used for better things. If it's again a very broad brush.
It makes sense.
But,
if you're concerned.
And if you're concerned and you have, again, from a religious point of view, certainly that's one aspect. But just more generally, people want their money to be used for more productive things. And ethical investing is a way to be able to do that. There is no... when we've spoken about in previous weeks, the critical illness, the life insurance, where there's very prescribed, sadly, life insurance is very straightforward. You need a death certificate to prove whether you're alive or not. The critical illness, the companies we work with, there's 35 conditions that are very clearly defined as to what will trigger a claim. But with ethical investing, rightly or wrongly, it's far more broad brush. There's not a prescription to say this is an ethical company and this is not.
Yeah.
Now, companies will use the various guidelines to make themselves look more socially responsible, to have more green initiatives within them, but a lot of those are purely driven by those organisations, as opposed to a particular company or standard that they have to meet.
The thing about it is, I think, there's a lot of cynicism that surrounds the idea of ethical investing, because I think for a lot of investors,
it does have
make me some money. How am I going to make money?
Exactly.
Being overly nice.
People can get very. Just it's purely, as you say, about how much they can make, and how that money is made becomes secondary.
Yeah.
Whereas if you're then, it's very woo-woo, very, out there.
Very woo-woo.
You know what I mean? You're just given this terminology of perhaps you're very not as focused. But that is actually not fair on that area. You can still make money, but be very ethically minded.
Well, that's a good definition of ethical investing, isn't it? That it isn't necessarily money first. You want to make money. There's nothing wrong with making money, but it's about making money in what you perceive to be the right way.
And I think that's a very key part of ethical investing, as opposed to being laid down by maybe an ISO number or a kite mark or some other standard that's laid down by an international body. A lot more of ethical investing is driven by the individual. So your own beliefs are what's driving your investment decisions.
Yeah.
So again, when someone becomes ethical investing, again, as you probably already can gather, it covers a much broader range of descriptions, shall we say.
Yeah.
So, and then this is where when someone does come to me again and says, I want to plan my investments in a certain way, it just, to me, actually is very positive because they've given it some thought. It's not that they've just said, make me some money. It's actually, no, I want to make my money in a certain way by either excluding certain companies or actually investing into certain areas because I have a strong belief in that.
And there's another side to that, and you're right, and I hadn't thought about that ahead of the discussion today. It's an additional part of the planning, isn't it? So it's an additional kind of point of clarity, I guess.
It is. And again, helps me in a way because I can say, well, actually, if you invest into these companies, these funds, they may well have exposure to these companies. Now, are these acceptable to you or not? If they're not, that's fine. I think when we've spoken in the past, I think there's 50,000 plus funds that can be invested into. Yeah. So there's always a solution. It just means we need to find and work a bit harder to find that right solution for your situation.
Okay.
So again, going right back to the beginning, no one's the same.
Yeah. No, that really is true, and you can't overemphasize that, I think. So ethical investing is kind of, it's a broad term, isn't it?
Very broad.
It covers specific approaches, lots of different approaches. Let's break down some of the terms, first of all, because I'm looking through these. Most of them I understand. Something I hadn't thought about is negative screening before. Okay, now it's a traditional method involving excluding certain companies or sectors from an investment portfolio. And this is really about, I guess, moral objections that maybe, these are not things that you would hold close to your heart.
So a negative screening, so they're as opposed to, I guess, a positive screening. Most positive screenings would be more just on the returns and the financial gains that those companies or funds have been able to achieve.
Makes
the
sense.
Negative screening would be actually looking at them from what do they do? Are they acceptable to you from, that ethical point of view? And we keep using this term, but what are we talking about? It's things like oil and gas. It would be so damaging to the environment. It would be...
it could be weapons.
Weapons was a very strong one. It could be tobacco. It could be, again, if we're using the Islamic point of view, alcohol, other banned substances. Maybe some people would have views about pharmaceutical companies if they don't agree with particular areas that their expertise are in. So that's where the negative screening come in. But it could also be that the company, even as far as packaging, is the company, whatever product it may be. So the product itself might be pretty benign, but has it got a bad reputation for not utilising recyclable packaging, as an example? Certainly people have looked into things. That's when the detail that can be drilled down into to decide whether, now that's, say, taking it to a very detailed, it's usually the more broad brush, the oil and gas, the chemicals, the as you say, weapons, alcohol, tobacco. They're the more typical companies that would be negatively screened.
Gambling would come into there, that kind of thing. Adult entertainment, that kind of stuff definitely comes under negative screening.
Yes.
It's interesting that, because the more you drill down, the more nuance there is. But it's the decision over, let's take packaging as the example there. It could be somebody is there is no need for you to use so much cardboard, I could not, with all the best intentions, invest in a company that, utilizes that packaging in that way. That may be a really important point to a particular person.
Yeah, it may well be. And I would suggest it's less frequent we come across that. But
Sure.
But again, I want someone to tell me that when we're having our discussions, because there are still ways and means to plan for that.
Okay. So, that's the first of the terms. Negative screening is the first one.
Yep.
ESG investing. ESG is the acronym that we all hear all the time. And for ages, I just kind of nodded. I tried to nod sagely and go, ESG is very important. And I'm thinking, I don't know what it means. It is environmental, social, and governance. Of course, I get that now. But this is an approach that evaluates a company's performance based on those those factors. That's the key there, isn't it?
So that's when that packaging, for example, that would be the governance and the environmental would come in there. So they are actually thinking about that. Perhaps I'm making more of a bigger point than that one really is. But nonetheless, it just highlights how detailed one can get into this. And the environmental social governance is a very broad brush. A lot of companies will, dare I say, pay lip service to this, but it has become more.
I don't think you're alone in saying that. I think that's been said a few times with lots of companies.
Yes.
Not all, but some.
Not all, but some.
Yeah.
It's again, a buzzword, a phrase, something that it's become popular, and therefore it's mentioned, but not necessarily given the due attention it deserves.
It's true, but it's something that if you're a company and you're serious about the environmental, the social, and the governance factors, you need to be publishing what it is that you're doing. So you can make decisions on that.
You can, and again, that's another key point. You see the companies that are more serious because they do publish these things, whether they are good or bad, but they can actually publish them and then every year take an audit and to see how they've improved. If I may pick on a company, Polestar, electric car manufacturer, owned by Geely, I'm never sure how that should be pronounced, the big Chinese conglomerate.
Geely sounds better to me.
Geely.
Yeah.
But nonetheless, their cars, from literally the raw material coming out of the ground to the product being dismantled at the end of its life cycle, they have worked out the energy consumption and the damage that causes. So they are, certainly from the research that I have done, one of the most detailed assessments of their full life cycle of their product. And every year they're now publishing it. The latest models they've produced are far more efficient, and they've then found efficiencies throughout the process as well. And the amount of energy is needed to make the car has been significantly reduced. So again, you can see when companies really do embrace the ESG, you can see they actually can make significant changes and impacts and improvements to their environmental.
Am I mixing that up?
No, you're not. I mean, initially Polestar
some kind
was
of combination.
Absolutely.
Yeah,
Polestar started as the performance brand of Volvo. It was then split off to become its own electric-only brand.
Okay.
So there is a lot of components that are shared because they are very similar. But now they are pure electric standalone brand. But yes, you could rightly argue with a lot of similarities to the Volvo range.
Right, okay.
They've got, again, that Swedish, very...
there's a Swedish design ethos.
Design ethos, they're the words I'm looking for. Yeah. Very clean, very simple, very functional. Yes.
I do like a Volvo. I just realised there, we got onto cars, and cars is your thing, and all of a sudden you just...
lit up,
eyes just
but
lit
only
up
because
there.
it's something that I've seen, and their report runs to many pages. So if you really want to, see a company that is embracing that's why I use that as an example, because they have taken that trouble to generate it and produce and let people know what they've been doing.
Just as an aside here, if you've been in a coffee shop at the weekend and there's a guy in there that looks like Jason Statham reading Polestar's annual performance report, it could be James Thomas. That's a possibility. All right, so that's ESG investing.
ESG.
The next thing on this list is environmental factors, and this is not just environmental factors as a blanket headline. This is a company's impact on climate change, a company's energy efficiency, a company's waste management
Yep.
policies and practices. So you can really drill down if you want to.
Yes.
You want to take an ethical investing kind of standpoint. That's something that could be important to people as well.
Very much so.
Yeah.
Very, very much so.
Okay.
Because again, as you've identified, once the companies start producing that, you can really see what are they doing, how much are they really paying attention, how, are they making a difference to their energy consumption? Things like LED lights in offices, just as another small example, but you do that across the world in numerous offices with thousands of people sitting in those offices. It makes an enormous difference.
Yeah.
Smart heating, all these things. Lots of companies will actually record their data and show the impact or the reduction in their impact on their energy consumption.
And smart air conditioning.
Yep.
In a country like the UAE,
Yes.
where we are now.
Yep.
Okay. All of this points to intention and ethical investing, and that's why we're kind of running through, the approaches that you can take. The next one on the list, two more really to talk about, maybe three more actually. I think. I suppose social factors is something as well. The approach that a company has to the way it treats its workers, the efforts it makes in terms of diversity, the efforts it makes in the community in which it is part or it serves.
Yes. Again, people may say that as what does that matter to the pure hard-headed view on investment? Am I making money out of this? But if the company is doing good things in its community and for its staff, it's got a happy work environment, it will probably make more money because those employees will want to work harder for that organisation.
Yeah, there's
So
a very good chance of
yes,
that at least.
It's not guaranteed, but typically lots of studies have proven that if happy employees will be more productive.
Well, there are no certainties in any kind of investing that you do.
No.
You have to take a view, and one of those views is something like social factors. You're right. I think it's very important. We hear all the time, don't we, that a happy staff is a productive staff, and if
Yes.
a productive staff is producing, then companies grow. So there's actually some
And goodwill in the in its local community is again another huge
That's also important.
Huge impact, yeah.
Okay. And it's something that perhaps in pure investing isn't really considered. So again,
Yes.
you're really drilling down into details here, and that's really what the ethical investor, I guess, is doing. Impact investing is a phrase that came up here. I don't know if you can explain that. I mean, I've got what I think is a definition here, but specifically allocating capital to companies, organizations or funds with the goal of generating a measurable, beneficial social or environmental impact alongside a financial return. So, an example like investing in a company that produces wind turbines or improves access to clean water. That's the
So that's
the
again
definition.
exactly the impact.
Yeah.
They are making a direct impact on that subject or that
There are a
area.
lot of words there I didn't
There are.
understand in a row. So,
Yeah.
but I
But
take
to
your point.
break it down, it's so you're probably looking at a fund or a company that's far more specialised in what it's doing,
Yeah.
but and having then a bigger impact in that area.
Okay. The final one here on this, and these are specific approaches to ethical investing, is stewardship or engagement.
Yep.
So this is investors using, an approach. So if you hold shares in a company, you want to influence, use voting rights at AGMs, or to encourage or offer a way to make sure that there's positive change. Here's the example. Pushing a fossil fuel company, for example, to invest more in renewables would fit under that kind of
Very much.
stewardship engagement banner.
Yes, absolutely, because you're using your power, your combined power, because as a shareholder, effectively you own that business, to have influence over what that company does, and that stewardship of the business to make sure it's continuing to deliver the type of, or be the type of company you want it to be, and help in the areas that you feel passionate about.
So those are some of the approaches, right? So we've got that out of the way. Where and how might a person, this is where your expertise comes in, how might a person invest ethically? Where do we start with that?
what I would like I would with a normal investor with funds or ETFs, exchange traded funds, because again, to try and analyze the entire market, find companies, in particular companies that are doing these good things, you could be there for years because there's so much to sift through. And even when you then find a few, are they good, bad, or indifferent? Go to a fund that's already done that. So there's numerous, mentioned word stewardship. There's a very popular fund called the Stewardship Fund. So it's looking for opportunities that meet those criteria. So the fund manager has a very clear definition or objective of what he or they are trying to meet for the fund. And again, they will use some of the phrases there, the negative screening, but also positive screening to build that portfolio to make sure that you then don't have to do that. Because again, why do we use a fund? It's to do the screening for us and then to pool our money with lots of other investors who are also looking for similar strategies and come together to be able to then invest as a collective in those areas that we're interested in. So that would be one area. Then, but if, for example, solar, clean water, other green energy initiatives, there are, because there's been such a increase in the interest in these areas, there are also now indexes that you can track that are purely focused. So again, it's to cut out the research on your own behalf. You can go and look up an index that focuses only on that area, and then you can see that it will have companies that have already been vetted and screened within that index, and then you can buy the index via the ETF, so you get that exposure to those areas.
Okay, I mean that's interesting because it's so similar to standard. What's the word? Standard investing.
What exactly? What do we call
Pure
it?
investing.
Normal investing,
Normal
whatever you want to
investing.
call it, but just without that particular requirement for being more ethical. But yes, what do? All of the above, rather than just going to the FTSE 100, so the leading 100 companies in the UK, or the S&P 500, the 500 in the US, or whatever it might be. There are similar indices that follow these areas.
Yeah. Okay, and you make your decision based on the research you do. The
Yes.
thing with the ethical side of things is the research. Research is available wherever you go. Google is your friend, of course, it always is. But
Yep.
you know, it is. It's more. It takes more effort to be better. But I mean, I suppose in lots of ways that's kind of the way you're living your life anyway. So you're willing to do more research.
I would suggest absolutely if you already have that.
If that's your mentality, if that's the way you look
the way
at
you're
the world.
looking at the world and wanting to look at the world, then you have already taken that step forward. So therefore, when you're then committing your hard-earned money, you also want that to be committed in a similar way. And therefore, you're willing to take that extra few steps, that extra bit of research to make sure that you're happy with where it's placed.
Do you think there's a feeling amongst financial consultants, financial advisors that, you know, people that ask to be more ethical investing, do you think it's a bit like, oh, you're not going to make any money, oh, yeah, this is a pain, I have to do more research. Is there a little bit of that, do you think?
I'm sure there is.
It's
in
a little
certain areas.
harder
It is,
to generate
but it's only a
returns in
little
some
harder.
ways. So not much.
I don't think it is.
Okay.
And I would, as I say, if a prospect comes to me and says, I want to do this, again, I'd be more than happy to assist because
Well, there's another side, isn't there?
you, again, in a far more committed investor. Because they're really clear in what they want to do, and you can explain to them. If I made, so there was a couple of funds that I mentioned, or exchange traded funds that are following. For one, I'm just
But
pulling
you
up
get to
some
do something
information.
slightly outside of the norm as
You
well.
do.
Would be an observation.
And again, if someone's coming to me and says, I want to do this, it's great, I can go off and do a bit of research, a bit of analysis, a bit of have you considered this, that, or the other? Are you aware? There's a solar ETF. It's been up nearly 50% this year. So it's had an absolutely stonking return.
That's a staggering year, yeah.
Yeah. But if you then look at...
I've not heard the word stonking for a long time, by the way. Congratulations
It's
on
great.
using that.
Yeah.
That gets 10 on the broadcast bingo card.
Not many people have had that on the bingo card.
Not.
But actually, I'm looking through the top 10 holdings, and there's not one there that I recognise. They're all very much renewable energy. They're infrastructure, sustainable infrastructure capital. They're Array Technologies as another one there. So these are companies that are, as the name suggests, they're building and solar is a very specialist, because as the name suggests, is panels on roofs, on fields, on big chunks of desert, or indeed oceans. There's talk of that, floating solar panels. So again, all of these things are all part of the ecosystem.
Yeah.
All looking to generate.
We were talking this morning with somebody who said Sundar Pichai from Google is looking at putting data centers in space. You'd have data center power, basically data center stations, space stations.
Yes.
Spater. I don't know. What would you call them? Fantastic idea. There are all sorts of outlandish ideas.
There are all sorts, and a lot of them will come to nothing. But where actually you've triggered another point that I wanted to make is the irony of a lot of the growth this year and the last couple of years in alternative energy especially has been driven by AI and the big tech companies, because of their enormous thirst for power to run the cloud. Because again, we all think of a cloud somewhere sitting up in space, but of course, well, maybe it will sit in space. But at the moment, they're largely in big rooms that they want to put in cold places, because they need to be cooled because of the heat generated by the servers.
Yeah.
So, all these, and they obviously are conscious of because on their business plans or their annual reports, they will have a section for ESG. They want to be seen to be generating or utilizing power that's come from clean sources. So it's directly feeding into the solar industry, another alternative energy, because that is a huge area of consumption.
It always makes me laugh is the wrong word, but it's kind of vaguely amusing that things come down to such simple questions in the end. These huge data centers. I mean, you said big rooms. These are
vast.
The vast size of football fields.
Yes.
Many football fields. But the energy produced is such that the heat is an issue. You need to cool them, and it just seems like such a simple thing, but it is such a huge issue because our thirst for information and the internet and the next thing in technology is there. It all comes down to simple engineering stuff at the end very often, doesn't it? That aside, let's look at some, I guess, I was going to say investment strategies, really, but the things that you avoid, I'll let you lead with investment strategies if ethical investing is the way you want to go.
That's an interesting question. Why I say that, as I've just highlighted, in the last year, the solar isn't picking on that, has performed amazingly well. But the previous years, it's had years where it's fallen by a similar amount. Certainly when the first Trump administration, it went through the doldrums because there was a view that we were going back to more traditional sources of energy, and therefore these new alternative power production wasn't so...
That's when coal was purported to be making a huge comeback.
Precisely.
At that point.
At that point. Yeah. So there has been a period where it's probably suffered from its lack of investment or perceived lack of use. Suddenly that's
through lack of interest.
Through lack of interest.
Yeah.
So they can be far more volatile, would be one of my observations. So again, that needs to be discussed and highlighted.
Well, that's something you need to factor in.
And you need to factor in.
Whatever you do, whatever investment you make.
So again, with a lot of clients who show or declare an interest, it may well be that, I think we discussed the strategy, what I call core and satellite. So a core holding of the more traditional investments, and then the satellite, rather than maybe being tech or other more volatile, they're replaced by the ethical investing.
Okay. Okay.
To give you an area, because again, while we may think we are wanting to be completely ethical with our investing, when we see something fall 20, 30%, you then have the more normal reactions. Oh, I didn't want to lose money.
Yeah.
So therefore, if I have that core that perhaps not quite as ethical, but more solid in its construction, and we then have those funds on, as I call a satellite, sitting around the outside of that, a smaller investment amount. So therefore, you still get that good feeling, dare I say, that you're committing some of your investment, your hard-earned money, to your good causes. And again, that makes it sound naff. It's not meant to, but the areas that you feel passionate about, but not to the degree that if it were to fall significantly in value, you wipe out your retirement plan.
You've talked in some detail about global clean energy. That's the fund that you've particularly been talking about. So 2025 up 47%. That's a stellar year.
Yes.
And the focus there is what? Solar, wind, hydro, electric power as well.
Exactly.
Okay.
Yes.
So that's there's also the global solar fund up 46%.
Very
this
similar
year.
performances.
So, So energy
similar
around
reasons.
the world.
Yep.
And as you mentioned there, in the doldrums in past years through administrative, I guess, in the US decisions.
But obviously they're having a knock-on around the globe.
Well,
Because a lot of
exactly,
the venture capital and the startup money that funds and gets these initiatives off the ground originates from the US.
Okay.
It's starting to change, but that's been typically where it comes from.
Right. Well, there's another one here that you mentioned in the notes, and it's a fully Sharia compliant fund. That's the Amana Global Equity Fund.
Yes.
Yeah.
Very interesting fund.
Strong returns.
In amazing returns.
20%?
20% a year for the last 4 years.
Okay. So that's a heavily US weighted fund. It's HSBC fund, is that right?
It is an HSBC fund,
Right,
yes. They're
okay.
Amana range. But why I just, again, so great name in the sense that most people would have heard of HSBC. So a very well-run fund. It's, where are we? 7 billion under management. So again, not a small fund. You're pooling with a lot of other investors. But the returns, it's been 22% per year since the fund was formed. So you're able to then have your religious ideals met, but still get a very good rate of return. As I mentioned, when you look at the sector allocation, the geographical allocation, highly weighted to the US, 81%.
Okay.
So, this is where your previous question really becomes more pertinent. Yes, you've got your religious or personal beliefs as one area, but then this is where, as your advisor, I would start saying, okay, that's great, but are you aware to meet those requirements, you're actually exposing a lot of your money to one area? And how does that, is that okay? Because
it runs contrary to kind of perceived wisdom, doesn't it?
It does, that's exactly it. Yeah. So you're, rather than diversifying, you're actually concentrating. Is that a concern?
Yeah, okay.
Or does your beliefs outweigh that?
Yeah.
But that's fine. But
that's a strength of conviction.
It's a strength of conviction. But the conversation needs to be had to make sure that you're happy with that. And then maybe we look for, again, I'm just picking on this one particular fund, we go off and do some research and find a fund that is more weighted to other countries. Because again, I mentioned this geographical, from a sector point of view, it's over 50% in technology. So again, you can see where most of that return has come from.
I was going to say, that's where the growth from.
Yes.
Obviously, but yeah, fair
so
enough.
Again, no problem with that, as long as you're aware that it's almost a pseudo-technology fund focused in the US. It's just that the funds have met the criteria to be viewed as Islamically acceptable.
Okay. Okay. So, well, it's interesting that we're there actually. So again, just before we jump on, but this is a question of research and strength of conviction
Yes.
of decisions, and the level of comfort that you feel
Yes.
based on the research that you've done.
Yes.
And if something is announced as being Sharia compliant, then hopefully that meets your own particular kind of core principles. But I think the world of Islamic finance is interesting here, because if you're looking for a more, I mean, in theory, a more transparent, certainly a more ethical viewpoint, then lots of Islamic financial products will meet the desires of people who aren't necessarily Muslim, but are looking for
Yes. I mean, I would have no
a more
qualms
transparent, ethical viewpoint.
if I wanted. I would happily invest in that fund. I mean, the returns alone are justifiable.
It makes a great headline,
Yeah.
that's for sure.
But as long as you're aware that it's largely US focused and it's largely technology focused,
Yeah.
if that is also acceptable to you, and again, going back to my principle, core and satellite, that would be very much a satellite fund, because it's of where the investments are structured,
Right, okay.
because it is higher risk. It has to be viewed as higher risk, because it is so concentrated in one country and in one sector.
Yeah, okay. But that's the risk reward
Yes.
paradigm, isn't it, James? That we've talked
Always.
about ad infinitum, I think. But it's interesting that that's a Sharia compliant
Yes.
fund, because Islamic finance offers this kind of approach. If you're looking for values-based rather than value-based investing, and it's an important distinction to make, really. But it's a benefit to everybody.
It is.
Doesn't matter where you're from, what you look like, who you are, what you
But
believe.
again, it takes away that, when we were talking right at the beginning about it being slightly alternative, slightly out there. Well, no, this is bang right in front and centre. This is investing into some really serious companies that have met the Sharia compliant criteria, and produce some fantastic returns. And yet, so that they would be, and it would be acceptable to most investors from a return point of view. That other hard-nosed, purely investment-driven focus, but equally they would meet the Sharia compliant view as well.
Well, it's a natural sort of path of asset allocation, isn't
Yes.
it? It was something you would immediately consider. Do you think, in some ways, there's an attitude of you used the phrase "woo woo" earlier on, the kind
Yes.
of hippy dippy approach?
Yes, that's what I mean. It's
is
not
there-
hippy-dippy at all. It's
very much mainstream.
Mainstream.
That particular fund
Yes.
that you're talking about, and I think that it makes an important point, doesn't it? That it's not necessarily that you're just a hippie that wants to do the right thing,
Yes.
but there is a genuine alternative there. I think is the point.
That's exactly the point.
Okay. Do you think there's an attitude sometimes in the investment community, in the professional kind of financial community, that ethical investing is a little bit too out there for me? You got to think about returns. It's all about bang for your buck.
It certainly was there. Is it still
Changed,
there?
do you think?
It's certainly changing, because again, examples like this that prove very much that you can have both approaches in the same fund and achieve a very attractive return. It certainly was in the past. Oh, what are you worrying about that for? You want this. This is where you don't want that. That's only going to lose you money. Not the case.
Right. Okay. So there definitely has been a change.
Yes.
There's a change of viewpoint.
Yes.
I guess it's a generational thing, but it's
think-
also necessary, isn't it?
Very much so. Yeah.
Yeah. Okay. What have we missed today? We've got 5-10 minutes left. We can still talk. What have I not asked you? I should have
What I
asked you.
wanted to, I've just searching through my notes there was a couple of points that I wanted to raise. Really just further about doing your research. I've mentioned about indexes or indices that track the green companies. And there was just a couple of points I wanted to raise. I mean, this one particular is the MSCI Europe Select Green 50 Index.
Gotcha.
So
Yep.
the name's very top 50 companies in Europe with a green bias is the, if I read the description, includes large and mid-cap companies across 10 developed markets in Europe to represent the performance of those stocks and build an index that people can then follow. environmentally sustainable economy through use of efficient and limited global natural resources. So, sounds great. That's what it is. If I then look at the top 10 holdings, or constituents rather, of the index, number one is Total Energies.
Okay. All right then. Who I know to be doing a great deal to address ESG concerns.
They are. But I just wanted to, again, highlight that point. Total Energy, I guess second or third after British Petroleum and Shell. There's an oil company.
In terms of market cap, for sure. Yeah.
But because of they're very much taken a view a few years ago to pivot away from that more towards the green energies, and hence the name Total Energies as opposed to when they were just simply Total.
Do you know what? It's a really good point actually that you make, and I understand why you're saying that, because you do the research. If you were to look at the list and you see an energy concern at the top, first glance there are bells.
Yes.
Going, there are alarm bells going. But you need to do the research to understand what Total are doing to mitigating any effects.
And then looking down the list, SAP, so the technology company. So again, you're not initially thinking, well, why is a IT company there? But because of what they are doing with their technology to help the green industry and how that tech is being implemented in the first place.
Yeah.
Again, Siemens, so building wind turbines and other industrial or utilising their industry to help with the green improvements.
Do you know what's interesting about this? Lots of financial advice, investment advice, it's the kind of thing that people often sit together and discuss. And we've all got the friend who is the expert and is just, you don't want to do that. I've looked into that. That's just a load of old nonsense. And generally, those people are the people that haven't done their research properly. We know that. But it's easy to influence people who are trying to do the right thing. They talk to somebody that they perceive to have a better knowledge of maybe the investment world and make a decision based on, it's erroneous information in some cases.
Very much so.
So,
but again, I just wanted to highlight it's the research and then just looking, because then you start drilling into these companies and you see, they've had to go through a strict vetting process to be part of these 50 companies. And when that dismissal in the past, it's a load of old nonsense. No, actually, there's a lot of, it may not be perfect, but these companies are striving to move things in the right direction.
Yeah, okay. And you can do the research and see the published documentation, see the results, and then you make your decision based on that. The point of this conversation is not to recommend anybody or any particular thing, by the way, and that's not what we're trying to do.
Absolutely not, and that's why I'm talking about, I like these utilising, or discussing rather, these indices, because these are independent bodies who have actually put these together because they view them as companies that are delivering green initiatives.
Sure, and they offer a cross-section in terms of research and ideas.
And again, if your views are still not being, or your beliefs are not being met by these particular companies or indices, then there are still, again, as I mentioned, 50,000 funds. So there will be something that will be there that does meet your criteria.
It's also not something that you should be afraid to ask for. This is if this is how you think and this is what you want to see, this is how you want your investing life to be. The point is that there are funds across the board that underperform, overperform, outperform.
Yes, and then we'll do it different times,
ways.
Which is why I'd actually have less concern about investing into them. As long as the person is on board and understands, because if they're part of a portfolio, again, why do we build a portfolio? Because when one's up, one will be down, etc. So you get that balance across them. So as long as they aren't correlated, and again, you'd have to say that this sector does correlate very closely, even if you're in solar or wind or hydropower, there is a lot of cross correlation, but it's still worthwhile exploring to make sure that opportunities are taken advantage of.
I just thought of a great dad joke. There's far too many financial advisors a bit too interested in wind. But there you are, that's just a different thing, I suppose. It's not funny at all. But, do you know, this conversation, we've kind of looked at this from through a lens of if this is how you want to live your investment life, okay? But there's also a point to be made that it might be that there's just one thing that really appeals to you. You love the idea of, I don't know, take solar energy, take wind energy, since that's where I managed to go a moment ago. But it might just be something that you're really interested in, something that you really want to see grow, something that you really believe in. It's not necessarily that you want to live, you want to be the most perfect ethical human being that's ever existed. The point is, there are things you can do to be better in your investing life if you decide to, in particular sectors, that could also make you money.
Yes, it's not purely.
You don't have to be purely ethical.
It's not purely ethical. It's not a pure folly. These things will allow you to invest your money as a proper investor, and proper in inverted commas, in the areas that you're interested in, with the expectation it's not just because you think it's the right thing to do. It would also have the potential to make you a lot of money. And and again, as always, the longer you invest for, the more chance you have of making money, because these things, as I've seen over the performance figures, the longer you're there, the better the returns.
And I guess in our lifetimes, solar, wind, hydroelectric energy, energy sources are, I don't want to say safe bet investments because that's the wrong thing to say, but they are.
You would think that they are areas of expansion, of growth.
Yes. Yeah, so that seems like a reasonable play. It's just an interesting conversation because, again, it's really got nothing to do with... I
would say it's not the first conversation I would typically have with a prospect or a client. No. But as that relationship develops, and I've asked them, so anything else you'd like to let me know about? And they do, absolutely. Yeah. And it's become more frequent that I'm asked those questions. 20 years ago, 25 years ago, when I entered the industry, it wasn't. It was technology then, funnily enough. The dot-com bubble was just before it exploded. But these things have become far more of interest to more people. Hence why there's now so much information out there to take advantage of, because it has become an investment class in its own right, with the right structures, and the companies are run as the same as any other company, with the right due diligence and the right structures and the boards of investors, and so they are following their proper mandates.
I just thought of something else there as well. We've got a few seconds left, but I guess when it comes to doing research, and that's such an important part of this, I think that's one of the takeaways from this discussion today. But, utilizing AI, harnessing AI in the proper way. One of the things that I think is a real bonus about AI is it's dispassionate. It's, generally speaking, I like to think at least, it's unbiased. You put a question into Google or whatever your particular AI engine might be, it's going to give you a broad spectrum of views. It gives you a reasonably honest answer. So doing research now, it's a starting point, I understand that, but if you have no kind of vested interest. I hope you don't have any vested interest.
I would hope so.
Maybe I'm being naive.
Maybe we are, but I like to think that you asked that question.
It's pulling on lots of sources. Is the point. And if you use the internet to research in a more traditional way, you're looking at particular articles where there may be vested interest or advertisers or particular ways that a writer thinks. Hopefully, AI is a bit more dispassionate, or at least displays a number of different ways of looking at it. So that's kind of a useful benefit there. It's just something that struck me. Look, we're out of time, unfortunately, but ethical investing today with James Thomas, independent financial consultant. And as always, good to talk to you. Thank you.
Likewise, thank you.
Appreciate you coming in. This is Mira Business FM.
Mira Business FM, where business comes to talk.